Good morning, everybody. How are we doing? Is my mic working? It is. Hasn't been used for a week, so I never know if it's actually going to work. How are you doing? Welcome back. Everybody have a good week and lots of money, hopefully. Morning, Paul, JC, Evil, Virginia, Berlino, Peter, Monkey, Gregors. Derp. It's time. How are we doing? All good. That's the wrong MT4. That's a good start, isn't it? That's what I want. Right, so going to go through the week basically today. Have a look at what's coming up. Quick recap of last month, which did 10% last month, which was pretty good. Not amazing, but not bad. Mainly because most of the market's been rotating. So sitting in 7.5% of drawdown, which carrying forward into June. So not a bad month. But this month, obviously, is the first month we're going to have an interest rate drop for the euro. So quite a big impact potentially this month and shift in fundamentals for lots of currencies. So we'll see what happens with that. But we'll go through the news and have a look at what's coming up. Just wanted to quickly start off with the yen. Quick look at the US dollar yen, because obviously this intervention has failed dramatically. There's been nothing much said. I've been scanning Financial Juice every day for the last week. The blue stuff seems to have disappeared. Oh no, it's not. It's still there. I thought this morning might have gone. But I've been scanning through the news. Not an awful lot of talk out of Japan about any kind of further intervention moves. So I get the feeling Japan is in big trouble because they can't seem to get any power into their currency, whatever. So that intervention that we had has failed. And obviously the last week, as you can see, this is the last week since I did the last stream here, we haven't gone anywhere. This has not moved at all. So we are sitting back at the second intervention level, holding at the moment for the last week, but it cannot get any power at all. So that cost many trillions of yen to action that intervention in the view to getting the yen powered up and starting a move, and it hasn't actually happened. So it'd be interesting to see what happens with the interest rates for the yen, which I think are next week. Yeah. So Friday the 14th, the Bank of Japan interest rates coming out. So it'd be interesting to see what they do with that and see how the market reacts to the interest rate changes. If we don't get much reaction out of that in a positive way for Japan, it means that the intervention move has failed and their attempts to use interest rates to control inflation and the currency have failed, which means the yen is in massive trouble. So I'm still not trading any yen pairs at the moment, just because I have no idea what the fundamentals for the yen are. Just don't know what's going to do. So I haven't got a directional bias on it. And as you can see, ADR now on US dollar yen is 71. So there's so little movement on the thing. Intraday, you can make some money with it if it decides to get a move, but it's not moving because of the yen, it's moving because of the cross. So I'm trading the crosses. So it just doesn't seem any point in trying to second guess what the Japanese are going to do or can do. So I'm going to leave that out for the minute. So this week we have PMIs this afternoon for the US dollar. So quick look at the US dollar on the Euro US from last week. Not an awful lot. So we are, stick a line where last week was. So that was Friday, Thursday, Wednesday, Tuesday, Monday. Okay. Should use my own indicator, shouldn't I, that actually draws the weekly lines in. But anyway, so that was last week. As you can see, we opened up there last week. That's where we are now. no movement on the US dollar. So the euro US dollar is the inverse of the dollar index. So if you want to see what the US dollar did, if you look at the euro US dollar, that'll give you an indication. So no movement at all on that. So PMIs this afternoon for the US are the first news event we've got this week for the US dollar. 245, quarter of an hour after market open. If you're using stock index Hedge EA or the opening range Breakout EA, I would leave the open this afternoon because the open is likely to be like that until that news comes out. There's not going to be a lot of movement I wouldn't expect in the market beforehand. So you're likely to get whipsawed at the open. So wait until that news comes out, then obviously it's going to go somewhere. Tomorrow morning, we've got the CPI for the Swiss. Swiss, as we know, are reducing interest rates. So that is forecast to be a small bounce. Again, Swiss franc, I'm not trading at the moment because I just do not know what the Swiss are doing either. Very tight-lipped about everything they do. And the fact that they dropped interest rates without telling anybody, I'm not sure you can read into any indicator at the moment what the Swiss will do with their next interest rates. So it could just go off on a run in any direction. I wouldn't put it past them to put it back up again. You know, the Swiss are just so unforecastable, basically. So difficult currency to trade at the moment. But we got the CPI number coming out tomorrow on that. Then we got jolts in the afternoon. Doesn't tend to do a lot. GDP for the Australian dollar on Wednesday, and then non-farm employment change in the afternoon for the US. And the big one this week is the Bank of Canada interest rate. Well, the first big one this week is the Bank of Canada interest rate. So that's 245 on Wednesday. We are forecasting a drop. So it's 50-50. I'm not convinced, but if you look at the fundamentals for the CAD, which was up there, and I've just switched it over to the live room because I realized I hadn't scheduled any of the live rooms. We're at 2.7 dropping. So it is there. It's close enough for them to start dropping interest rates. We know the Euro's dropping this week. They're on 2.6 at 4.5, 2.7 at 5. Absolutely no reason why they couldn't drop it this week. But the Bank of Canada haven't been particularly forthcoming with any information. We know the US dollar is not dropping its interest rates, and the CAD tend to follow the US. So this will be quite a big shift in Canadian monetary policy if they decide to drop their interest rates before the US. So quite a big one on Wednesday. We could see a very big move in the Canadian dollar this week. So that comes out on Wednesday, 4.75. Is the forecast. PMIs, services PMIs for US dollar on Wednesday afternoon after that, and then the press conference. So whatever we get here, whether it be a shock or an expected result, the conference is where the Bank of Canada will outlay what their forward guidance is. The thing that we're interested in at the moment with all of these central banks when they drop their interest rates is how quick are you going to do it? I.e., are we going to have a drop of 0.25% every month, the same way as we had the increase? Or are you going to drop it, see what happens to inflation, skip a month, and then drop it or increase it or freeze it or whatever the next month? It won't be an increase, will it? It'll be a drop or a freeze. So that's where we're going to find that information. Well, hopefully find out some guidance as to what's going to happen there. So important 3:30 Wednesday afternoon. Then on Thursday, it's the big day for the euro. So this is the first drop in the euro interest rate. It's a 95% certainty. There's always something that can change. You know, stuff does change, but 95% sure that the euro is dropping. This should start the decline in the euro. So we should start to see gradual weakness coming in. It won't be catastrophic. It might, on the day it may be, but I doubt it. But it won't be a parabolic move, I wouldn't expect, but it will certainly start to be more bearish. So my stance, all the EAs are turned on to short-only mode on the euro at the moment. So I'm not taking any longs on euro because they're going to be the first guys to go. Well, we thought they were, but obviously the CAD could go. So the thing with the CAD, if they do drop that interest rate, they are affected by US dollar. And US dollar is not forecast to drop its interest rate this month. So I think with the CAD, we'll see a little bit more of a sideways move with very slight bear move rather than the euro, which should start to come down with nice market structure. So Shorts on the euro. So we'll find out with that on Thursday. That's going to happen pretty much sure. But ECB press conference will be where we get some forward guidance from Lagarde as to what they're planning. Their current plan is one drop, one freeze. One drop, one freeze. That's the current plan so far for this year. So next month, we will stay at 4.25 and evaluate what inflation is doing and then decide what's doing the interest rates in August. That's the current plan. But again, things change very, very quickly at the moment as well. So we'll see what happens with Lagarde. Then on Friday, it's non-farm payroll day. So we've got the unemployment rate, which is the key driving indicator for fundamentals coming out, which is forecast to be the same. So busy week. So tomorrow, this afternoon is important. PMIs are massively important. They're a fundamental driver. They're a leading indicator that drives inflation and interest rates. So we need to pay attention to that. The market certainly will. Tomorrow, we got a massive one with the CPI. Wednesday, massive one with the CAD rates. Thursday, massive one with the Euro rates. Friday, unemployment rate. So every single day this week is a major fundamental shift potentially that could happen not on every currency, but on the vast majority of currencies. The only thing we're really missing is the Aussie and New Zealand this week, but we have got that GDP number on Wednesday. So it's going to be a busy one, very busy. So we'll see how we go. 2 clean breaks this morning if you're trading stock index hedge. Well, for me anyway, because I'm only targeting 1R. So straight up, target, straight up, target. Job done. If you're not and you're going for longer targets, you're hedged on that one and still long on that one. Yeah, we'll see what happens to that. I didn't trade at all last week on the indices. So over weekend news, not an awful lot that I could see. This is all Friday's news going past. So there's nothing red over the weekend apart from Hamas stuff, which not really doing an awful lot, is it, at the moment? There's something from Japan there. No, Jackson I saw, not Japan. There we go. Ignore that. So nothing exciting over the weekend to report news-wise at all. Right. So I'll leave it on there at the moment because when we're doing the analysis, it'd be good to look at what's happened last week since I was last on. Morning, everybody else. Haven't said morning to Chucks, Neo, Segar. How was my week off? All right. Got lots of stuff done. Just stuff. Didn't get any analysis or any of the trading work that I wanted to get done, but I did some mountain biking, other stuff. Nothing exciting. Morning, Senji. Tra-la-la. We missed you. I missed you all too. Morning, XR update.news. Can't even say it. Glad you're well and the family is fine. Yes, it's all good. Life is good. So we're going to do an analysis of everything this morning. Have a look through all pairs, see where everything is. There's no ADRs so far to... Oh, yes, there is. There is a Swiss yen. That's a gap. So straight up into ADR, straight off of ADR. But that's a gap down. So if you look at the close of last week, that's just a gap down, basically, probably a broker spread. So wouldn't really class that as an ADR today. So we'll have a look through all the pairs. Swiss yen is obviously extended on the 4 hour as well because this Swiss franc rally and this useless yen at the minute. But other than that, it's just a case of analysing everything really today and having a look at all pairs. I don't know if anybody is running the Position Trader EA RSI2 strategy that I posted the set files for. But I've been running this on a test account, basically, for the last couple of weeks. And I wouldn't call it the Holy Grail, but it ain't far off. It's absolutely killing it, as you can see. It's open to big losses if you get a really big, fast fundamental squeeze. That seems to be when it gets hit. But other than that, this thing's killing it. It's easily banking 1.5% a day, 1% a day It did 9.6% on Friday, and that's because I manually closed some of it out as well. It could have probably done more, but yeah, it's pretty damn good, I have to say. So I'm going to do some more testing with the Position Trader EA using the RSI2. But the way that I've got this one set up at the moment, it seems to be pretty good. But like I said, when I did all the testing initially, there was 30,000 odd variations that worked. So I just picked one at random. And it's doing what it did in the back test. So I'm waiting for something to go wrong with it. So I'm going to run it for a month or so and see what happens. But it's looking pretty good at the moment. So I might get a small account set up to run this strategy. But it's basically normal position trading using RSI2, getting out if it moves an ADR against, and yeah, it's getting into multiple positions. So we'll see how that goes, but I need to do some more testing on it. Where can I find those files? They're in the Discord and Telegram. They'll be in the files section in Telegram. Yeah. POS EA RSI2. There's another one there, but that's the one I'm using. 9010 RSI. That was posted on May the 13th. So yeah, but it's looking good. But we know the RSI2 strategy works. You know, it was done decades and decades ago, and people have been using it for decades. It's just very, very slow. But this is my variation on it. It's not RSI2 that everybody else is trading on the daily charts. This is an hourly variation. So it's good. Morning, Kennelly. Morning, Danny. So, right, we'll start off with the Aussies and go through everything today and see how we go. Yeah, so we just whiz through everything. So this afternoon, obviously, anything you do with the US dollar, be aware this afternoon, it's all going to change, potentially. So all the yen pairs, I'm not going to go through the yen pairs individually because, as we know, the yen is in massive trouble. So a lot of these yens, might as well just cover the yens first. Since the intervention move, virtually all the yens apart from the US have completely undone the intervention, are back to pre-intervention levels or have exceeded pre-intervention levels. So hence me not trading this at the moment, and I haven't been trading it for 3 weeks, 4 weeks now since the intervention. Basically, I made the money back on the intervention that I lost on the previous move before the intervention, and since then I haven't touched it because I wanted to see if it worked. It didn't. So at the minute, I have absolutely, excuse me, no clue what this is going to do. So if you look at all of these yen pairs, we're back up here with the Aussie yen. We double topped, got a nice little sell off. They rebought the lows from the previous week, and we are now basically going. So basically, all that's happened with the Aussie dollar yen is we've gone back to intervention as we'd expect. Limit orders trigger at the high. They've pushed it back down into last week's low, which they've rebought. So we're sitting now waiting to see whether or not we break all-time high or the market doesn't want to go higher than all-time high. So your guess is as good as mine. CAD yen, we're back to, we filled the propulsion gap off the intervention. So that's where the intervention started. So we're pretty much back there on the CAD yen. Euro yen back up. That's the intervention high. So we're back up there again. You know, it's just grinding. It's nothing's stopped. Look, so this is still massively bullish against the yen. Pound yen, we have exceeded the intervention level last week. We had a reversal alert put in, yeah, and a retest. So it's looking like this may start to reverse. The pound could well weaken off of the euro move this week as well. So the pound and the euro are very closely linked. If we get a big weak move off the euro, off the interest rate drop, we might see a weakness in the pound as well. So, but that again, as you can see, is stuck. New Zealand dollar yen. This is the one that has gone way beyond. So that was the previous high at the intervention. It's screamed past it. So this is out into new all-time highs. It's ridiculous. And the US dollar yen, as we know, is absolutely stuck here at the second intervention level. So this is the one that the Japanese are watching, obviously, because this is what their main exports and their main overseas holding for the currency is. So what's going to happen? Don't know. So again, I'm steering clear of the yen until I have some understanding of what is going to happen with it. I can see this sort of stuff happening a lot, which for position trading makes it very difficult to make money in this type of market regime, because you don't get enough movement to actually get to a profit target. And then all of a sudden it can take off. But if it takes off against you, as we know, you can just get stuck and you will just not get out. So if you want the bias, well, obviously long only, go long only. But what if they intervene again? You're stuffed. Yeah. Do you see what I mean? There's no way of using a normal type of trading strategy on this, because it is all about, will they intervene or won't they intervene? If they don't intervene, it's just going to continue trending. So you want to be long only. If they do intervene, you don't want to be long only. I have no idea what they're doing or what they're even capable of. And I don't think anybody is, which is why we're seeing this. So the yen at the moment for me is just not there anymore. I'm not trading it because I just can't see an edge in getting into it. It literally is a coin flip. And the trouble is, at the moment, that coin flip could be 2 weeks to 3 weeks before you get any payback out of it. And if you go short, the swaps are going to completely wipe out any profit. If you go long, fine, because you get a positive swap. But either way, 2 to 3 weeks having your capital tied up in something that is a 50-50 shot is just not worth getting into. So those are all the yens. They're all completely either still rallying against or totally stuck. So not really interested in any of those. Morning, Franco. I'm back. The world is balanced again. Correct. So Aussie dollar CAD. So we'll start off with the Aussies. Again, any analysis that I do this morning on this week, it could completely change. As we know, the Canadian interest rates are forecast to go down. Yeah. So in theory, everything against the CAD should rocket on Wednesday. On Thursday, anything you get into against the euro, in theory, should rocket against the euro. Yeah. So, is what I would expect to happen on all of these currencies, like everything against the CAD, is we're just going to sit here and wait for the CAD rate, because no bank or institution in their right mind is going to stick a ton of money into anything with forecast like long or short against the CAD before that interest rate comes out. Because if the Canadians suddenly turn around and go, yeah, we were going to drop it by a quarter, but we've actually decided not to, this thing's just going to either go like that or it's going to go like that. So you've just got to be prepared for a lot of sideways on everything until the news comes out. But then once that news has come out, they will be sitting there going, we're waiting for the next news, because every single day we've got a major fundamental. So the market is going to be very sort of jerky and stop-starty this week. So Aussie dollar CAD at the moment, as you can see, for the last 2 weeks, totally sideways, facing, no idea. It's going to break out one way or the other. If the fundamentals work as they have always done in the past and the Canadians reduce their interest rate, the Aussie CAD will fly. Yeah. And we should continue to move to the upside. But what we will likely get is that sort of price action, which is what we seem to be getting a lot at the moment. The fundamentals move the market by 200, 300, 400 ADR over a period of a week, and then they sit there and wait for the next news event. That's what we're going to get. So if you're the wrong direction on it, this is the problem at the moment. You get into something and you have to wait for the next news event before you get out, which means swaps become a factor. So we've gone nowhere on this thing for 3 weeks. In fact, if you look at where we are, where we got to off the back of that news event and where we are now, we've gone nowhere for 4 weeks, a month, we have gone nowhere. So there's no advantage, no bias, no nothing on it. That is what it should do when the news comes out, assuming we get that 4.75. Aussie dollar, Swiss. So the Swiss franc went on a massive rally last week, as you can see. So everything against the Swiss franc. Again, I'm not trading any Swissies at the moment because, again, I have no idea what the Swiss franc is going to do. We were not expecting the interest rate drop. They didn't tell us they were doing it. We didn't get any indication as to what they were going to do next with interest rates. We still haven't. So this is as much as the yen is at the moment for forecasting something. In theory, because they dropped rates first and their inflation is lower than target, they should do nothing with interest rates. If that's the case, why did they drop interest rates initially? Yeah. So the way the fundamentals work are you have your interest rates sitting so your inflation sitting at 1.4%, which is below target. So what you should really have if you're below target is continuous dropping in interest rates because you want that to stop going down. They dropped it by 0.25%. It stopped going down and it's bounced, but that 0.4 bounce has literally taken it to 1.4%, which is way below target still. So there is an argument for doing that, and there is an argument for doing that. They have given us no indication of what they're going to do at all. So this thing, if you get, again, the Swiss franc at the moment is incredibly unpredictable to trade because we have no indication or no way of telling what the Swiss are going to do. If you get into a position short on it, so you're betting on them dropping the interest rates and they decide to freeze interest rates or put them up because inflation's coming down too fast, you will be stuck in a squeeze on that for weeks and weeks and weeks. Likewise, if you go, they're not going to change the interest rate, so I'm just going to play either direction, and they decide to change the interest rates, you're going to be stuck in a squeeze for weeks and weeks and weeks. It's just too unpredictable at the moment, the Swiss. So again, these currencies, the Swiss and the yen, are the two currencies that everybody has always been very hot and cold on trading because they are completely unpredictable. Everything else is pretty stable economically. They've never used interest rates to control inflation, therefore anything goes. These guys are all about money being pumped through the Swiss national bank system. They are a country that never gets involved in wars, NATO, anything to do with any of that. It's a safe haven. So it's got it goes mental and then it stops. And it's completely unpredictable, which is why people long-term have a difficulty trading these two currencies because they are just completely unpredictable. The biggest squeezes I've been in the past have always involved these two currencies. So at the moment, because we are just teetering on the verge of interest rate drops after 12 months, it makes sense to remove those from the portfolio and just concentrate on the majors, the more stable currencies, if you like. So it could go either way with the Swiss. At the moment, obviously, as you can see, it's massively bullish. They've dropped interest rates without telling anybody, which makes everything bullish against the Swiss franc. Last week, we had a massive rally into the Swissy. This was not caused by a safe haven run. There was nothing happened that should have caused this. So they are just powering back up on the Swiss, which tells me that they may be expecting that inflation figure to pump again. So when we get that inflation number coming out tomorrow morning, month on month, and inflation rises again month on month, it means that that 0.4 increase that we had on inflation could be accelerating, which means that the Swiss will not be dropping their interest rates again on the next one. And if it decelerates or rather increases too fast, inflation, they may say, oh, we better go back up to 1.75, which makes it massively bullish. But they will never, ever give any indication as to what they're doing. They will just come out and do it. They have also been known in the past to just come out and change interest rates without even forecasting the date. They just go, we're changing our interest rate. They removed their peg without telling everybody. It collapsed the market and made brokers go bankrupt. Yeah. So at the moment, the Swiss is just one of those unpredictables. Intraday trading, no problem. You've got loads of movement intraday to make money out of. But anything you're trading higher time frame where you're holding for days or weeks, it could, if you're on the wrong side of it when it decides to do something stupid, you're going to get stuck. So At the moment, it's massively bullish, but we have no idea what's going to happen. If that inflation figure comes out tomorrow completely an unexpected level, this thing could just take off. But which way it's going to take off, no idea. So at the moment, it's a long. It's a lovely pullback into the 24.72 range, yeah, in an uptrend. So it's a good buy. The Aussies have indicated they're not going to change their interest rates anytime soon, so that makes that neutral to bullish. So it's probably got more of that than it has that on it at the moment. But if you are trading it with H1M5, you're long at the moment from Thursday last week. And that would have been the entry in there somewhere. So you did have an exit in the propulsion move on Friday. But if you're in it, you're pretty much back to where you were as an entry. So that's long at the minute. Aussie dollar yen we've covered. Aussie New Zealand collapsing down very, very nicely at the moment. Coming back down to where I was forecasting it would get to. So there's absolutely no reason why we shouldn't come and fill this propulsion gap, because this move was caused by an interest rate staying flat. This move started on an interest rate staying flat. There's no reason for that, and there's no reason for that. They're just probably undoing what they did there, which was nonsensical. So it makes sense to continue to the downside. So that sort of move I would expect. You're long at the moment from last week. But we are tapping into this area here. So from a market structure perspective, this is a 50% pullback on that leg, pulling back into previous resistance, which got broken and retested there. So this is a very good long continuation market structure. So it could well continue to the upside. The fundamentals on these two are the same. Aussie, New Zealand. So the Aussie interest rates are 4.35. New Zealand interest rates are 5.5. They haven't changed. There's no forecast to change. Inflation's still too high. Inflation's still too high. It is coming down at a fast rate, but it's not coming down far enough. So they are both neutral. There's no bullish, no bearish advantage on either of the currencies. So this one could, again, go absolutely anywhere, but it shouldn't be going parabolic. Really, there's no fundamental reason for it, but it did. So either way, normal position trading on this. Any RSI extensions to the upside, short, long, any downsides. On hourly, you'd have been in last week's, and this is the problem. Like I say, you get a news event, we get the move, and then we sit there. Then something happens, and we sit there. Then we get a news event, and we sit there. That is market structure at the moment. It isn't market structure. It's parabolic flat, parabolic flat. So you're long from there. Week before last, still waiting. 6 days in, nothing's changed. So yeah, target is that. Possibly up there. If that big long move is going to continue, this is where you're going to go from. However, if we're heading back down to the old propulsion gap caused by that news event in the reverse, it's just going to do that. Either way, it's a good long at the moment. So, but it is been ranging for a week. So obviously RSI's reset. It's totally flat. It's not gone anywhere. Aussie US, I'm short on this at the moment from the RSI last week. So the EA got me in. The EA's been trading for me all week. So I haven't needed to intervene on anything. It's just been carrying on. So yeah, I'm short at the moment on it. My target is here, which is this propulsion move there. So I'm looking for it to head back down into there and potentially hold this range. So PMIs this afternoon, if we get positive PMIs this afternoon, it'll be down there. If we get negative PMIs, it'll be up there. So I'll be adding a second position up at that resistance for shorts. But we know these guys are not changing their interest rates. We know these guys are not trading their interest rates. So therefore, this thing has got nowhere to go. So RSI extensions up or down, just getting in on the pullbacks. CAD Swiss. So again, the Swiss franc. I might as well just cover quickly all the Swissies as well, because support resistance bounces quite possibly hold. Yeah. Other than that, I have no clue on this thing. So for the CAD, obviously it's interest rates. Interest rates are dropping this week. Therefore, this should come down this week. So right now, if you got into the RSI extension there, you're out. If you got into the RSI extension to the downside, you're in. You had an exit on Friday. I'd be very careful with this, but you're probably just going to come down and tap into that propulsion gap again and bounce. So, but stance could well become negative on the CAD moving forward. Euro Swiss, this thing goes sideways 99% of the time. Its ADR is 43, so ADR is starting to pick up, but only because of that massive rally last week. But Euro is bearish. Euro being bearish makes the Swiss franc bearish. So again, it tends to do an awful lot of that. There's no movement in the Euro Swiss. It's very difficult to make money out of, as you can see here. It takes quite often forever to get out of stuff. So yeah, could go either way. Pound Swiss, this is bullish at the moment from the pound perspective. That's 4 hour. But again, we are going to be dropping our interest rates at some point soon as well. When the euro goes, we tend to go. So the euro is going this week, which means that I think Bailey may come out with a bit more of a bearish stance. So good chance that we'll start to see some weakness coming into that pound, but obviously with the Swiss franc as well. That could go either way. If the Swiss franc weakens and the pound weakens, you're going to get that. But that could go either way as well. So again, if you're trading the Swissy, you can see how long these moves tend to take to play out. It's 2 to 3 weeks. You'll be stuck in a lot of this stuff. So it's a lovely long at the moment. It's a beautiful uptrend. The 24.72 moving averages are supporting it. So quarterly, monthly, it's just lovely. So it's a nice long at the moment, but they could drop a bombshell at any time. So just be a bit careful. But for the moment, any RSI extensions to the upside or downside, you can get into. New Zealand dollar Swiss, same thing. As you can see, just not going anywhere, is it? So it's we've had this big move. New Zealand dollar's had a massive rally. The Swiss franc has undone half of that. So very good chance that that could be the move if nothing changes on the Swiss franc. So it's a good looking long at the moment on New Zealand dollar Swiss. And US dollar Swiss, obviously, there's no bias on this whatsoever because we don't know what happens there. But they will at some point go, right, it's going to be July, August, September, whatever. They're going to give us a date at some point. And when we get that date, the market will start to factor that in and it will start to either go that way or that way. Well, it will obviously go that way. But we don't know when yet. So at the moment, this is, again, a neutral. So this is beautiful to trade at the moment. I mean, every extension on this one has been great. You've had exits very easily on any trade you've taken on this. So now it's a long at the moment. But when that Swissy decides it wants to go, that's the Swiss franc interest rate change that wasn't expected, and look what happens after. Yeah, this is why I'm worried about the Swiss. If they suddenly go 1.25, everyone's going, hang on a minute, your inflation's below target. Why are you dropping? Doesn't matter. The market's just going to either dump it or pump it, one or the other. So it's just risky, I think, personally, the Swiss at the moment. So, but right now, it's beautiful to trade because it's just going up and down. So you can get into anything, but I'm just worried long term on it. Swiss yen. So if you want to get the most unpredictable, volatile thing on the planet at the moment, that's the thing. You can make so much money out of this thing when it moves, but it's just. So you look at all the other yen pairs, for example, over the last sort of 6 months or so, they're all like that. Yeah. And you look at the Swiss yen, it's like that. just shows you these two are just not, they do not behave like all other FX pairs, you know. So this is when you're doing analysis. I've been doing a lot of analysis this year on lots of different strategies, my own and other strategies. These two pairs virtually every time ruin all the analysis. So you're sitting there, you do all your tests, and you're like, works brilliantly, works brilliantly, works brilliantly. As soon as you test a Swiss or a yen pair, it's like falls apart, just falls apart. So, and this is over the last 4 years. Yeah. Then you take that analysis pre-COVID, same thing. They do just have a different personality, if you like. So these are both safe haven currencies. When we have anything go wrong in the world, they both power up. When they power up together, there is no bias on it. So you get an awful lot of this. So from an intraday perspective, this is something which is really good to trade because it moves an awful lot intraday, up and down most of the time. But as you can see, it's not been doing it recently. So it's just a case of, if you want to trade the Swiss yen as well, you have to understand that you're going to be taking your life into your hands at some point. That is either going to be massively profitable or massively a pain in the backside. So again, leaving it alone. So those are all the Swissies. Again, at the moment, I just taking them out of the portfolio because I don't know what to do with them. So at some point, it'll become a little bit more clear and more stable when everything else starts to move. But right now, it could do absolutely anything. So when you're trading, if you're trading the Swiss, that's what you want to focus on. Yeah. So you focus on the base currency, not the cross. So focus on CAD if you're trading CAD Swiss, because the CAD is going to move on its interest rates. The Swiss doesn't have to do anything, but for no reason, and this is again why people don't like it, for no reason the Swiss would just go, do you know what, we're just going to have a massive rally, or we're going to have a massive dump. And if it's not a safe haven run, it's just something that happens. Banks just pile money through the Swiss. So just be careful. And obviously, if anything kicks off in the Middle East, Russia, Ukraine, anything like that, civil war in America, you know, all sorts of stuff can happen. The Swiss franc will power up dramatically, and there's nothing on the planet that can stand in front of the Swissy when there's a safe haven run. Everything collapses against it. So, and this world at the moment is in a very rocky spot. So, you know, anything happens, the Swissies, you want to be long. If you're the sort of person that wants to trade the Swiss from a purely what's more likely to happen scenario, you just want to be long the Swiss all the time. Even if the interest rates are coming down on the Swiss, if something goes wrong in the world, that thing's going through the roof. When it goes through the roof, you will make a lot of money on it. Just the way it works. So those are all your Swiss francs, euros. So this week is interest rate drop on Thursday. So the rates are coming down to 4.25. We've known this for months. Lagarde and the ECB are probably the best bank on the planet for telling us what's going on in long-term plans, which is why the euro US dollar is the most traded currency on the planet. Most of the volume in the world goes through the euro US dollar because they are obviously two huge currencies, but very, very clear guidance from Lagarde and the ECB. We always do. The press conference has always been like, right, guys, this is what we're planning to do. And everyone goes, brilliant, I know exactly what to do with the euro. So euro rates are dropping. We've known it for many, 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 many months now. And as you can see, there's been with any interest rate changes that are forecast and known, or any fundamental changes, the market will tend to move on those fundamentals somewhere between 2 to 4 weeks before they happen. So the market will position itself short on the euro because they know the interest rates are coming down. So they'll start that move usually a couple of weeks to a month before. And as you can see, that's what we've seen happening with the euro. That is why when we get unexpected news, so for example, if we got a 4.5 interest rate instead of a 4.25, that's why you get that 300, 400% ADR spike, because they're going, well, hang on a minute, you told us we were doing that. We've got to get out of all this lot now. If it comes out as expected, you tend to get something like that, big whipsaws, or you just get bang, a continuation move because they're going, excellent, we're in profit, let's add. Yep, so that's why you get those big moves on the fundamentals when you get the news coming out. So shorts only on euros. So I'm not in euro odd at the moment because I'm trading euro New Zealand. I'm not trading both of them. There was an entry there on the 4 hour last week. Wasn't one on the hourly. Oh, that's why I'm not in it. Just trying to work out. There was an entry on the 4 hour. So if you're trading H4 RSIs, you had an entry short there last week. But yeah, so not really doing anything at the moment. That wasn't last week. It was last month. Sorry, not last month. Yeah, it was last month because it's the beginning of the month. But yeah, so it was there. You know what I mean? So there was a short entry there. Nothing at the moment going on this one, but likelihood is we're going to see that at some point this week. With these expected interest rate drops as well, I say, the market tends to go into rotation before news events because it doesn't want to put a load of risk on before the news because it could go the wrong way. With the euro, there is a chance we may get a rally into the drop because the market will start to position themselves. Any latecomers will start to position themselves short on it. So we'll see. We might get a move on the euro this week, but probably we'll see that until the news comes out. So Euro CAD, this is the one that is very, very hard this week. So Canadian interest rates change on Wednesday. They are dropping. Weak CAD. Euro interest rates change on Thursday. That is dropping. Weak Euro. So when you get something like the Euro CAD, the move on Euro CAD should be that on Wednesday, that on Thursday. Yeah. So if when the Canadians drop their interest rates, that will weaken the CAD, which means the euro will rise against the CAD. On Thursday, when the euro drops, the euro CAD will come down because the euro is weakening. However, at the same point, that Canadian dollar could be continuously weakening for the next week or so. So it's very hard to predict what price action you'll see on the euro CAD. It could do that because they are both dropping at the same time. So a bearish against a bearish makes a neutral. That's what we could see. However, if one of them drops a lot harder than the other, so for example, why that would happen. Canadian interest rate drops. In the Canadian press conference, they say it looks like our inflation is coming down faster than expected. This initial 0.25 drop that we're going to put into place now is just the starting point. If inflation drops at the same rate it's been dropping at, we will do a 0.5 next time. The CAD will come down way, way, way harder. They may come out and say, we were forecasting a 0.25. What we're going to do is we're going to freeze it next time. So what you'll see is a spike on the euro CAD, and then everyone will go, well, there's no point in selling the CAD because they're not going to do the interest rates next month. And the CAD will stop. Then Lagarde could come out and say something totally opposite. So this week, this thing is going to have a lot of movement. The movement is completely unforecastable because we don't know what the press conference is going to be on either of those and what their forward guidance is going to be. So you can't forecast anything on it. Hence it being flat at the moment because the market's sitting there waiting to see what happens. Yeah, you're not going to suddenly go, all right, everybody just go massively long on this because we think the euro is going to weaken, but the CAD's going to weaken more. They're going to wait for the facts. When they get the facts released, the analysts will look at what the fundamental forecasts are, scorecard it, give it to the traders. The traders will then execute. So that's why the market moves after these press conferences, which is why I keep saying these are the most important things. This, yes, it's important. If it comes out different to forecast, it's massively important. But this is the important part. What do we do next? Yeah, the markets are always looking for where should I position myself? This is what tells them which way to go, not this. They know where that's going. They've said it last month. Now where you're going. That's what we want to know, where we're going in the future. So we've got obviously press conference there. We've got press conference there. So Euro CAD, impossible to predict. Obviously, market's sitting there waiting as well. So same as that, you get a little bit of a news spike, and that's it. So we 2 weeks now, we're sitting here waiting because we've got no idea which way anything's going. So that's Euro CAD. Euro Swiss, done that one already, but yeah, your guess is as good as mine. The Swiss franc moves with the euro. If the euro collapses, the Swiss franc will collapse. But if there's something going on in the world, the Swiss franc will rally. No idea. So forget Euro Swiss. Of all the Swiss francs that you do not want to be involved in, that's probably the one. Euro pound is, again, very difficult. The pound tends to move with the euro. And if the euro is coming down, the pound will probably come down as well. So long term, as you can see, trade partners, it's not in either party's interest to be massively bullish or massively bearish. If stuff takes off in that direction, one of these two has problems with trade. Therefore, we tend to keep everything nice and stable. 27 ADR, it's the lowest ADR on the planet, always has been. Euro pound, it's the worst possible currency to trade. From an ADR perspective, it doesn't move because we want it. In an ideal world, we'd flatline. Yeah, so we'd go, all right, I'll tell you what, let's settle on 0.85. Happy with that? Yeah, brilliant. Won't move. Totally stable trading economy. That's what we want. But obviously, you get fluctuations on news, which tend to get undone. You're going to get fluctuations on news, probably going to get undone. However, if the pound, Bailey, comes out and says, actually, we're not going to drop interest rates until August/September because it's just not happening fast enough for us. It is. Inflation is now almost at target. So highly likely we are going to drop our rates as well. Haven't had confirmation on when, but very soon, sooner rather than later. So if the euro starts to drop, we then go, we're going to drop. What you're going to get is in bearish against a bearish, which gives you a neutral. Yeah, so nothing. So, but when you get one that has a fundamental bias against the other, that's what you tend to get. So the pound basically saying, looks like it's going to be a while before we change our interest rates. Holy crap. Yeah. So you're going to get a lot of intra-week movement on it, up and down. But from a directional bias, there's no long, no short. It is just neutral. So this week, we could well see these lows getting broken. Yeah. So we're at obviously these lows. And you can see the market buys this level up because we want to keep nice and stable in the trading relationships. However, if their interest rates drop and the guard comes out and says, we said we were going to pause it for a month, but it's coming down quicker, so we are going to drop next month as well, you can kiss this goodbye. It's going to break out. When it breaks out, the market will start selling it. So when the market starts selling it, you need to look for where it's going to go. You've got to go back out to a daily chart. That's where we're going to head. Yeah. So you've got a fair old drop potentially. So if we do get that breakout this week and then Bailey comes out and says, we'll probably go August, not July, this thing's going to be down here. This is why I'm short only. Yeah, there's much more chance because the euro is going first on an interest rate that it's going to be weaker for longer because there is a reason to sell that. There is no reason to sell that at the moment. So, but we will see. And obviously the market on its way to its destination doesn't go down like that. It uses market structure. So you can benefit from these pullbacks, but they're going to be harder to make profit on. So you're better off waiting for the pullbacks and then jumping in because you're going to get much bigger, faster moves to the downside. But equally, the difficulty with trying to trade that type of strategy, and this is why trend trading is hard, yeah, often you don't get that. So if you don't get that push and that RSI extension to the upside giving you that short entry, you just don't get in it. You miss the whole move. So, the market a lot of the time moves down and it just flags and breaks and flags and breaks. Yeah. There's no pullback. That's where we get in. So watch propulsion gaps like that one. Yeah. Good opportunities for shorts. Euro yen, Euro New Zealand. So New Zealand's been powered up over the last couple of weeks. The euro has been they've been starting to sell off the euro, obviously. So this has been kind of a little bit of a perfect storm. All the old propulsion gaps filled. Yeah, they always do. However, these upside ones now on this are less likely to get hit because we're starting a new fundamental cycle. So shorts. So any you can get, you can see here, you've had that. That's it. You haven't had any other short opportunities on the Euro New Zealand for a month. There has not been a short apart from that one. So again, I'm not in it, can't get in it. It's not pulling back, but I'm not getting in it just because of I need it to be a signal on my strategy to get in, and there isn't one at the moment. So I'm sitting there waiting for some kind of rally so I can short it. But if I don't get one, I don't get one. Nothing you can do. Euro US. So this one, as you can see, is a lot more erratic. This is the most traded thing on the planet. Interest rates have not changed. Therefore, we are in a massive range, but we are in a contracting symmetrical triangle pattern at the moment. So something's going to give. That is more likely what is going to give. So I'm sure it's a beautiful double top, triple top monthly level as well. The risk is these upsides at the moment. So with the euro US dollar, the fundamentals are this week shifting short. The US at some point are going to turn around and go, yeah, we are dropping our interest rates, which is going to make this a short against a short, which makes it a neutral. So who is going to be the most powerful seller? That's the question. And that will decide the direction of this. So the euro could easily just continue to rally against this US dollar when they decide that they're going to weaken the US dollar. But at the moment, the US dollar is hot, cold, hot, cold, hot, cold. But it's been more cold than hot, which is why the euro has been running against it. So again, this is one of those currencies. The US dollar CAD and the euro US dollar are the ones that you are probably going to be safe in any direction unless you get some massive fundamental. But as you can see, doesn't matter. You got out. So it's one of those things. I think you can just trade in any direction. I have it on short only mode at the moment. So I'm basically waiting to see what happens on this one. But there was an entry on Friday. No, not get into that. Obviously not. That was probably too fast. Looking at that, so that there wouldn't have been an entry there on Friday. I don't know. Why did I not get in that? Or did I? Maybe I did get into that. Yeah, because I'm not showing any. Yeah, I did get in it. There you go. So I just realised it's the beginning of the month, isn't it? So I only have mine set up to show the last month. So that's last week, basically, obviously. So yeah, I did get into that on Friday. So there you go. That was the entry. That was the trade on Friday with the position trader EA, and that was the exit in propulsion. I had one there as well, which I got out of. So shorts only on that one. So yeah, euro US dollar. You can take longs as well, but so this is a good indication actually. The trades on this screen here. Any longs you get into on something that is bearish are just going to take a hell of a lot longer to get out of. Yeah, unless you get some kind of news event. The shorts are very quick. Yeah, in, out. That one was a little bit longer. That was actually only longer because I got out of that trade there. If I'd have stayed in that trade, you'd have been out of it the following day. In, out, same day there. So this is what I mean. You're going to find there's more interested parties in shorting, which means the intraday moves will be faster, which means you get out faster. When you go long and an intraday move moves against you, it's harder for the bulls to get back because there's so much selling pressure. So again, short only euro US dollar, usual stuff. ADR hits to the upside, support resistance upside, propulsion gaps to the upside, RSI extensions upside, just short. Pound yen ADR, that doesn't look good. So there's a move Move on the yen starting today. So yen powering up. So that's all your euros, shorts on those. So pound at the moment is the tricky one. We are highest interest rates in the world apart from New Zealand and the US. Our inflation is at target pretty much. It's not a given, but the next month-on-month CPI number is forecast to drop. If it does drop, that makes the decision for the Bank of England. We have to get those interest rates coming down because we do not want to get into the situation like the Swiss where we overshoot. And our big trade partner's gone. There's absolutely every reason for the pound to start to drop interest rates now. There's talk of it being July now. Don't know. So we'll see what happens. But with all the pound pairs, I'm kind of getting to the point where I sort of want to start looking much more at shorts than longs, as you can see against the odd here, but not quite there yet. So pound odd, you can trade in any direction at the moment. Same with the pound CAD. But as I say, we're just not getting an awful lot of movement at the moment. It's news event, sit around, news event, sit around. Yeah, news event, sit around. That's what we're getting because the market is just waiting for all these fundamentals. When the fundamentals all start to shift and all the inflation figures are where we want to be and the interest rates are all dropping nicely, everything will just start to get back to what it used to be. ADRs will start to increase. The market will have more confidence. It will go into greed mode. Everything will start to kick off. At the moment, it's not quite there. So shorts at the moment on this, ideally, but you could easily take a long and get away with it. As you can see, it's just going to take a little bit longer, I think, on most of these. So pushing up into that propulsion is still a possibility. Double top on last month. Obviously, we've got a lovely little bottom formed there from last month as well. So any RSI extensions to the downside, which you had there, obviously you can get out of. Any RSI extensions to the upside, shorts. I'm not trading pound odd. I'm trading pound New Zealand. So as you can see, I'm in that at the moment already. But they're both very, very similar. Pound CAD, I've got shorts on at the moment. I had an exit on this on Friday and I didn't take it because we've got that Canadian interest rate coming and I wanted to kind of see if I could squeeze a little bit more out of it. As you can see, I was looking for that propulsion gap. So at the moment, this is just a flag. If that CAD rate drops and the market decides it likes what it hears in the press release, this thing's going back up again. So I'm kind of regretting it. I missed this exit on Friday, and it wasn't enough. It was only a break even pretty much. But I was toying with the idea of shutting half of it, and I was doing other things, and I just missed it. So hopefully today, if we get an attempt on that low, what I'm probably going to do is close that and close that and sit in the 2 and see if I can get an exit on the 2 before the interest rate change. So I'm hoping we're going to get a bear move on this today, just so that I can get out. I mean, if it pushes ADR today, brilliant, I'm done. It'd be nice to be out of it before the news. But we'll see. So this thing should be, as you can see, should be bullish because the Canadians are dropping their interest rates. However, we're so close to Bailey announcing that we're dropping ours, and it's more, we know we're going to drop them. It's more of a, what's the percentage chance, Bailey, in July? 60, 70? Okay, brilliant. We'll start selling the pound then. So we're going to be selling the CAD, and then we're going to be selling the pound. Again, everything is going to start to move together, which is why everything should start to have nice market structure, because nothing's going to go, we are going to drop our interest rates. We are definitely not dropping our interest rates because everybody's inflation is going in the right direction at the moment. The Aussies and the New Zealands are lagging a lot. So if anything, they're the ones that should remain bullish for longer. But against the CAD, it's all going to be about news this week. But I would find it hard to get down to that sort of area unless, you know, what could well happen on the news is we get the Canadian interest rate change and it comes out as a drop. The market suddenly drops against so the CAD drops, pound will go up. And then all of a sudden, Bank of Canada come out and say, yeah, we are only going to do this once. We're waiting for the US now. We'll be back down here. So again, you can't forecast anything on this at the moment until we know what's happening with the news. So it's a tricky week this week, because anything you get into this week, you could well be stuck in it for a while if the wrong news comes out. So pound Swiss recovered. Pound New Zealand, I'm in long, have been in long for a bit, as you can see. So long entry was initially started here. We got a news event go against. So a couple of drawdown controls, scaled out for a couple of profits on it. So I'm in profit on the position overall. 3 positions on. It's just not going anywhere. Can't do anything with it. So for the last 2.5 weeks, just stuck. Can't do anything with it. This is the problem, isn't it? News, nothing. Yeah. We've got no news this week. Just waiting. The most likely, unfortunately, for me, I think, direction on this is that, because I think the pound will likely weaken off the euro news with the interest rates. But we'll wait and see. I'm only 150 ADR to average. Hence my profit target, as you can see, is here. Bottom of this propulsion gap. Yeah. So we've got this news, retest, add. They added again, added again, added again. If they get back to there, I'm out, because I think they might add again. So I've got another long going in here in probably by the looks of things in the next hour, which is going to be a double, triple bottom play. So if we can get down to there and I can get another position on, my average will be brought into that propulsion gap. If we can get back to that propulsion gap before last week's high, I'll probably exit. But we'll see. So I'm in profit on the trade overall on those 3 trades that I've taken off. 2 drawdown controls done. So this is the type of trade. The initial idea is obviously gone ages ago. So I just want to get out. It was wrong. Just want to get out and make a little bit of money on it. But for the moment, no directional bias. Hence this. So stuck. Pound US. So shorts on the pound US. This one should, I think, play out this week. We've got lovely targets to the downside. The US dollar is neutral to slightly bullish. The pound, as the euro drops, should be bearish, and Bailey will likely announce that we will drop our interest rates with more certainty soon. So this should continue to be bearish. It's just taking forever to do it, as you can see. So it's just not going anywhere at the moment. This is a pullback on this leg. It's taken like 4 weeks. So looking for a continuation drop on it at some point. Could rally up into there. I would doubt it, but my next short is on the double top. So if you break the double top this week, break the last week's high this week, I'll be getting in short again. But that's coming down nicely today. We're almost at ADR today already. So if we can break last week's low, we're going to run into the previous week's low. So we know that they're buying this level last week and the week before. So yeah, if we break this level here, we will flush down somewhere here, that propulsion gap. So, but there's too much news this week. So if the Canadian dollar loses a lot of power, the US will probably weaken, which means this will pop. Yeah. If the euro weakens dramatically, this will drop. Yeah. So everything is interlinked in currency trading. When you want to drive a ton of cash into one currency, you have to take it from somewhere else. So this is why all currencies, people say, like, why the hell did the pound go nuts today? Well, because the Canadian had news. But what's that got to do with the pound? Well, they needed to pull money out of the pound to put it into the Canadian because they want to rally it. So there's a limited amount of money and you have to get it from somewhere. So you borrow from somewhere to put it into others, which is why everything tends to move. Everything's interlinked. And it's a very difficult equation, which is why banks spend £100,000 a year on each analyst to sit there and figure it out. And they get it wrong a lot of the time. So at the end of the day, it's either going to go up or going to go down based on the CAD and the Euro this week. If it goes down, happy days, I'm out. If it goes up, scaling in. There's no directional bias on it, though. New Zealand, at the moment, I'm short. I've been short on this thing for ages. As you can see, I've done drawdown control on it. The thing's just not going anywhere again. The Canadian is likely to drop this week. So, yeah, it's a pain in the backside. I put an aggressive drawdown. Can you see I'm an aggressive short at the moment? I had an aggressive drawdown control put on this 3 weeks ago. Yeah. I put a break even on it last week because I wasn't paying much attention to the charts because I was off. It came up and it took my break even out because I asked it to. So it did. And then it dropped. Not like a little bit. It completely undid the move after it took my stop out. So anyway, I put another aggressive on. Well, I didn't. The EA did. So I took another aggressive drawdown control position. So I'm aggressive on this because the thing is just stuck fast, and I've got too many positions on. It's rallying this morning. What I would love to see is a retest of this area down here, and I will use that aggressive drawdown control position 100% of the profit. If we can get down to a break-even situation on this, or down into these lows, I will take that off, and I will use 100% of it to reduce the lot size on this and get the whole risk right down, because there's a good chance that CAD is going to start to drop. But the CAD will possibly have a short-term drop, and because the US isn't dropping rates, it will just undo that. So everything is really unpredictable at the minute, but we are just stuck. News event stuck. News event stuck. Got a news event coming. Probably going to do that. But, this is the Forex markets. They could drop the interest rates and the Canadian dollar powers up crazily. No idea. They do what the hell they like at the moment because they can. But it's just not going anywhere. So I'm stuck short on it at the moment with 1, 2, 3, 4, 5 positions in aggressive. 6 positions, sorry, including the aggressive drawdown control position. So the aggressive drawdown control position is designed to, as you can see, there's a stop loss on it there. So the whole idea of the aggressive drawdown control position is this trade isn't working. It's not playing out. I've done drawdown control on it. It's made a loss. So I want my average as close as possible to where we are so I can get out on the next batch of sellers that come into the market. So as you can see, my average is within ADR because of the aggressive drawdown control position. If the aggressive drawdown control position works, I'm out. If it doesn't, I stop out on that and lose 1.5%. That's it. And then I will get in another aggressive drawdown control position, because if they do push, they will undo a percentage of it. And that's what we're doing. We're just trying to get out of this. It's not gone right. We need to exit. So the bias on this is probably going to flip long with that Canadian drop on interest rates. However, because the US isn't dropping, the market might decide it doesn't want to sell the CAD. Yeah. Don't forget the CAD is also linked to oil. Not going great at the moment. There's a lot of factors in this one, which is why the market's kind of not doing a lot with it. So just sitting there waiting at the minute. New Zealand Swiss covered. And the New Zealand yen. New Zealand dollar, US dollar. So New Zealand CAD and New Zealand US are very much similar, as you can see. So I'm in this one short as well. 2 drawdown controls done. I've only got 3 positions on it, so I'm not aggressive on it at the moment. But as you can see, I've been in it for 3 weeks, 3 and a bit weeks. I got in, we didn't go anywhere. We had a news event. I'm in it. That's it. It's just not going anywhere. So stuck. Again, same thing. This will probably do exactly the same as the New Zealand dollar CAD does. So not great. I had an exit on this last Thursday. Didn't take it. It was a nice double bottom and they bought it again. So it's what they're going to do at last week's high this week. I've got a short above that level ready to go. So yeah, looking for a push back down into this accumulation. But we can't break that low at the moment. So again, stuck in this. If you're getting into positions on it, it's fine. But it's very hard to get out of. it's just not enough movement to the downside. But there's no bias either way on it either. This one specifically. So this will move on the CAD. It won't move as much as the CAD though. So I get the feeling this might completely undo itself this week and just sit here and do the same thing. So, but this afternoon we've got those PMI figures coming out. So the saving grace is if that PMI drops this afternoon, we get a negative number there. The US should drop. The Canadian will probably drop as well. So this afternoon is my kind of saving grace on that one to try and get out of it. If we get negative PMIs, if we get positive PMIs, positive PMIs, not negative PMIs, or positive PMIs, so that we get a pump in the US, so I can get out of these ahead of the CAD news. But we will see. You're in the hands of the fundamentals as always. US dollar CAD currently long. TP in propulsion here, so that's my entry. That's where I'm getting out, just below that propulsion gap. This is an absolute dream. This has been a dream for the last month, as you can see. Shorted it, exit, longed it, exit, shorted it, exit, longed it, exit, shorted it, exit, longed it, exit, shorted it, exit, longing it. I'm in profit. Can't go wrong. The US dollar CAD is just the most sideways beast on the planet. Again, same as the euro pound, a very low, well, it's not actually too low in ADR. It's a low ADR, low movement pair because they're big trade partners. They're both oil linked to oil. The fundamentals for each affects each other. So when you get a pump on the US, you get a pump on the CAD, which cancels itself out. So it just goes up and down all the time. Mean reversion heaven. And at the moment specifically, the difference we have potentially coming up is fundamentals are about to shift. So the interest rate differentials will become different, meaning that the US is bullish and the CAD is bearish. So this thing could start to take off. I'm not getting greedy if that happens. My exit is still there because that's what I want. You could wait until we get up to that double top. Likelihood is it probably will. But if it doesn't, for any reason, you're just not going to get the profit, are you? The greedier you get, the harder it is to hit the target. The longer you're in it for, the more it costs you to trade it. So we'll see what happens with this one this week. But this afternoon's figures will likely, depends on what happens. If we get positive PMIs, which would be beautiful, that hits target. All my New Zealand CAD hits target. My New Zealand US hits target. Everything hits target. So, but great. If it goes the other way, it goes the other way. But we'll wait and see. But at the moment, it's just a dream to trade in either direction. And we've covered US Swiss and US CAD yen. So there we go. But this week is just nuts. It's just unpredictable this week. Everything can change, specifically on these 2 days, Wednesday and Thursday. And don't forget, it's also non-farm payroll week. So when the unemployment rate comes out in the US, that all changes everything as well. So, you cannot predict anything this week. You're on the train. If you're long on something, you're long on something. If you're short on something, you're short on something. Deal with it. Just in it. So we're waiting to see whether or not the market moves our positions in the right direction or the wrong direction. We just deal with them as they do. So we'll see where we go. But potential fundamental shifts this week. So Euro and the CAD basically are the ones which are changing. And we'll see what the press conferences say. But all we can do. Eurozone PMIs just come out 47.3, pretty much forecast. German manufacturing as forecast as well. Financial Juice Elite. Fundamental overload, isn't it? Anyway, right. Morning, everybody else. Morning, New George, Heffron, Amy, Callum, Philip, Lippy, Grateful, Tammy, how we doing? Philip, did you trade the DAX this morning? Yeah. I'm out. So my trade was there, straight in, straight out, 1 hour, break even second half. Gap fill's just completed on the DAX. So gap fill bounce today. So yeah, I'm out. And also the FTSE straight in, straight out as well. 1.5 hour up at the open. And a nice 5 hour collapse to the downside. So if you're hedged on it, you're looking to get out of a hedge. You should probably be out your shorts looking to get long on that now. But that's come down quite hard. That pound should be rallying at the moment. That's dropping. That can't really tell actually. Yeah, no, it's definitely dropping. So yeah, out already. Gas went from 389 to 310 within a week. Really? Hold on. Yeah, I mean, you see, oil's not for the last 4 weeks, last month basically. Oil's stuck at the minute, so it's bearish overall still, but yeah, it's just not able to get going at the minute. So this is either that, but more likely, as we've just had new demand figures, that we've got OPEC this week. Oh, sorry, we had OPEC yesterday. Was it only yesterday? Oh, it was just OPEC meetings yesterday. I thought it was this week. We normally have more than one OPEC, but I guess not this time. So yeah, we had OPEC meetings yesterday. Nothing particularly exciting mentioned there, as you can see. Not really doing anything oil today. So it was it would have taken off if there was anything of interest. So at the moment, you're looking at buy. But yeah, I'm not trading oil at all. So we'll see what happens with that. But oil prices will only go through the roof, really, if we have a major conflict kick off. So, and at the moment, it doesn't look like anybody's doing anything about Israel. They've pretty much finished wiping out the area. So what's next? It will probably all peter out, fade out, and disappear. So there's no reason for that rally. So I was playing about 2 months ago. I was playing along on oil to try and get on the fundamentals of escalation in conflict, but it didn't happen. So who knows what's going to happen with that one? But, and again, that drives CAD as well. CAD and US, both oil export, mainly CAD. So if that oil price rallies, the CAD tends to rally. So with the CAD interest rates dropping, if oil continues to drop, we could see a very weak Canadian dollar coming over the next few weeks. But again, all down to the fundamentals. This is why I keep saying, you know, it doesn't matter what you do, what system, what strategy you've got. If you, whatever you're trading, whatever indicator you're using, nothing predicts the future. Yeah. So every time you get into a trade, the only thing you have in your control is risk. Direction is out of your control. Doesn't matter how many times your system or strategy has said the strike rate is 70% when it does this. Nothing to do with today at all. What's happened in the past has got nothing to do with today and nothing to do with the future. If you're hunting for that system or strategy that's worked in the past and you found it, brilliant. It ain't going to work in the future because it's the future. But yeah, we'll see. See what happens this week. It's going to be a big week. Big week. Lots of movement. So this week's live rooms, I'm doing a morning tomorrow, which will be look at the PMIs. Because obviously we've got PMI this afternoon. I wanted to do a morning session today because obviously I've been off for a week. So I wanted to look at the fundamentals, look at what's going on. So tomorrow morning, I'm going to do a recap on PMIs. And obviously we will look at what's happened with the Swiss. Jolts tomorrow, which doesn't do an awful lot. So going to do a morning tomorrow, but the rest of the week is afternoon, because obviously I'll be trading, be on for the CAD interest rate decision, and we've got the US dollar PMIs. I'll be on for the euro interest rate decision, and I'll be on for the US dollar unemployment rate for non-farm payroll. So it's all afternoon this week, apart from tomorrow, because tomorrow is pretty much a no news day. And then so tomorrow's the calm before the storm, basically. Unless that CPI number does something dramatic, if that suddenly comes out at 0.6 or a 0.8 or something ridiculous, that Swiss franc is going to change direction very quick. And obviously people will then need to reposition. So we could have a big day tomorrow, depending on what happens with that number. But I suspect it will probably come out at 0.4, 0.5, 0.3, in which case probably won't do an awful lot. So tomorrow is the no news day. And then it's just 9,000 miles an hour from Wednesday to Friday. Morning, Harold. Yes, was yesterday. That must be about oil. Yeah. So if anybody's got anything else they want to look at, discuss, or anything, let me know. But other than that, that's the week ahead. And I shall just be watching, trying to get out of stuff, basically. The only thing I've got a problem with at the moment is New Zealand CAD, which is just flip-flopping up and down and up and down. Leave that there. So yeah, I've got 1% risk on aggressive drawdown control. I would just like a down day. One down. That's all I want. A down day. We have had a down day. I don't really think you can call them down days. Yeah, we've had one down day there. That's a spinning top. That was just obviously a pullback on the news. So we've had literally one down day. Just not had an exit opportunity on it at all. Just one of those stucks. But apart from that, everything else is fine. Just waiting for stuff to move, really. Which is a struggle. But it will become a non-struggle when those interest rates start to drop this week. I've been scalping. Good, man. Yeah, scalping's good. This strategy, this RSI2 strategy is kind of scalping. So there's the New Zealand dollar Swiss. That's another. This is the beauty of this strategy. I've been watching this play out. I've done a load of back testing on it, and having watched it and popping in to look at the P&L every now and again, there are so many opportunities where you just look at it and you go, "There's 1.3%. I'll just stick that down there." New Zealand dollar Swiss. Let's just take it. 1.3%. Just like that. It's so good. Which is, that was 1.5%. But yeah, it's such a good little strategy from a position trading perspective, because you build up a position, and the vast majority of the time, what we're doing is we're playing on these quick pullbacks intraday, and I've tested all sorts of exit strategies on it, and the end of day close works really well, which is equivalent to what I've just done there. I've done it intraday. That works really well. 1%, 3%, 5% works really well. Targeting 0.5%, 1%, they all work. It just all works. Really, really good. But on the hourly time frame specifically, the only problem I'm having with using the position trader EA is you get entries which are fairly close together. So I might adjust this RSI entry, because I'm using 10% of ADR for an entry. So I might adjust the entry to use 20% of ADR and do some testing on that, because that's the only thing I didn't really test specifically. So, but more testing to be done. New Zealand dollar CAD, ADR. There you go. So this is the market selling the Canadian dollar, ready for that move on Wednesday. So we may well see a move into the CAD this week, Monday, Tuesday, which isn't going to be great because it means I'm going to stop out on my aggressive. Mind you, we may probably today we'll find some limit orders sitting at Friday's high, which could drive it back down. You will see. See what we see. Strategy tester doesn't work because you have to close it manually at the end of the day. No. Well, if you want to, it's up to you how you do it. There's no right or wrong, Danny. I don't close it end of day. No, these results, these are not end of day closes. This is using percentage exits. But they all work. As I say, I built an EA to test RSI2 strategy, and I wanted to test all the exit criteria. So I tested end of day close in profit, percentage exit, different percentage exit depending on number of entries. That was it. Yeah. So I tested all those different exit criteria using the EA that I built. They all work. So, and that is a prime example of, is it better to use a 1%, 1.5%, or a 2% target when you have multiple positions on? The answer is yes. All of them. Is it better to wait until end of day? Yes. Sometimes no. It's discretionary, isn't it? It's just trading. Yeah, there's nothing that works all the time. There's nothing that works better than anything else. What strategy testing is about is robustness testing. If you get in on an RSI2 extension on the daily time frame, the vast majority of the time it will pull back intraday. Sometimes it will pull back and close hard as a bull candle intraday. Sometimes it won't. So if you check your P&L every few hours and go, there's a couple of percent, there's a couple of percent, and anything that hits 1%, close it out for me. Yeah, using a positive risk reward like I've just done there, I've closed a 1.5% trade out. So if one of these goes into drawdown by 1 ADR and shuts, I win. Just simple. Keep it simple. Nothing right or wrong. This is the problem with trading. Everybody is looking for what is best. You cannot have best. What's it going to do? Where's this New Zealand Swiss going in the next 3 hours? There isn't a person on the planet that can tell you. A guy sitting with $1 trillion in Barclays right now that has the power to manipulate New Zealand dollar Swiss, he can't tell you where it's going because he doesn't know what the other 9 banks trading against him, taking the opposite side of his $1 trillion trades that he's putting in, is going to do to the positioning of the price. If he dumps the whole lot right now, the candle will shoot up, they'll all sell it, and it will pop back down. He doesn't know where it's going. How the hell are you going to know where it's going? Get out when there's profit. That's it. You can't find the best. There isn't the best. I can test over a year, and it's better to take 2%. Then I'll test the year before, and it would have been better to take 1. And I tested the year before, and neither of those were particularly good. They were break even, but if you closed end of day that year, it would have been fantastic. Yeah. Pick one. This is why the position trader EA is so good, because I just hit that button there because I saw a propulsion gap that has been sold over and over and over again. And it looks like it's being sold now. So I had an opportunity to put 1.5% in my account. It could bang through that and come up and test yesterday's high. That propulsion gap could hold. Was that the right decision to make there and then? Yeah, because I banked 1.5%. If it goes down to there and then hits this low and bounces off of it back up into there tomorrow, or end of day today, end of day close is the right thing to do, isn't it? Everybody's got to stop focusing on what the best thing to do is and just take money. All it's about. You're here to make money. There's money. Pound CAD. Money, look. This is in a really weird order. Pound CAD, there's money. I'm not going to get out of that. It's coming down nicely. I'll stay in that. But is it better for me to target 1% or 1.5%? I don't know. If I put a break even on it, though, I can tell you what I'm going to get. Just don't tell anyone. RSI 2. Yeah. Don't tell anyone. It's only been around for 30 years. What are the settings for RSI 2? I've put a set file in Telegram on the 13th of May. POS EA RSI2 D1 file section. But that is just a set file. Yeah, there's I haven't done the maths, but there's probably around about 250,000 combinations of settings you can use. I have no idea. I'm just making it up. Yeah, there's a set file. All the RSI2 strategy is, go and look it up. It's not new, yeah? Larry Connors. I don't know when he invented it, but it was years ago. It's been around forever. It doesn't say when, but it was a stock trading strategy specifically designed for the S&P 500. Yeah. And it only traded in line with the 200-day moving average on the S&P 500. People then have dragged it into stocks because obviously the S&P 500 is stock index. Therefore, if the S&P 500 is going up, the individual stocks within the index most of the time do the same. It's not as good. So all I've done is I've changed it. Obviously, removed the moving average because in Forex irrelevant, and I'm using the 90-10 signal. That's it. So it's nothing new. Yeah, this has been around forever, and this is the problem, isn't it? This strategy has been around forever. One of the market wizards used it, made a load of money with it. It's pretty much what Warren Buffett does. Yeah, he waits for pullbacks in the S&P 500 and takes them. RSI indicator would indicate that to Warren Buffett as well. But what happens is it makes money. It makes money, then it loses, and then everyone goes, it's crap, it doesn't work, and they move on to the next. Nothing wrong with the strategy. It's been around for decades. It's worked for decades. People are using it today successfully. However, if you get 4 losing trades in the row, off you go. Find something else. There's something better out there. It's not. The market moves up and down. This indicator, which is why I use it, tells you how strong those moves have been. The market's going to move strong in one direction. The only opposite is a profit take. The only thing the banks can do to make money is profit take. So every time it moves up, it comes down. That's what Larry Connors found decades ago. And if you want to change it to the RSI 7 or 4, do it. That will also work because all the RSI is doing, the relative strength indicator is doing, is showing you the relative strength between 2 instruments. Yeah? After a strong move comes a pullback. That's all it's doing. It's just doing mean reversion. But no one on the planet can tell you how far that will be. No one on the planet can tell you when that will move. What we know is after that comes that. Timing is impossible. Distance is impossible. Yeah, which is why when I've been watching this thing and when I've done my robustness testing, it's proven it all works. Yeah, after it's done that, it'll do that. Look at it. It's doing it now. Last time it did that. It did that. Last time it did that. It did that. When it did that, it did that. When it did that, it did that. It's all it's ever done for centuries. People don't read what's on the chart in front of them and go, well, this is easy. And it is easy. It's just not easy to deal with the emotions, which is why I keep saying, you know, that's what position trading does. It removes emotion. You get into something and it doesn't work out and it goes against you. You just get in again and you wait for it to go your way. It will, because it does. It always does. It has done forever. And it will do forever. As long as there's greed, there's banks, there will be markets that move up that have to move down to take profit. Simple. Just got to figure out a way to extract that cash in a way that is profitable long term. You're never going to be profitable month in, month out. It's not going to happen. Hope you had a nice break. Yes, lovely. Thank you all. I used 2, added 7 EMA for kind of signal. I used 2, added 7 EMA for EMAs. You know, the moving average is a reason to get in is absolutely fine. I'm using the 9 EMA, but a 7 EMA, a 5 EMA, or a 10 EMA, or a 20 EMA are just basically the same thing. It's just a different signal with a different distance, therefore a different amount of strength in your direction. That's all it is. Again, test. If you use the Position Trader EA to test the strategy and use 4 different EMAs as a signal for entry, I can guarantee you with 99% surety they will all work because the market's coming down. So yes, get in. There is no right or wrong. There is always different. That is it. That's all you get in trading. Something different. Different result. If you get in there, you'll get a different result if you got out there to if you'd have got in there or you got in there. Yeah, they're all the same. You sold it. Whether you sold it there, or there, it doesn't matter. You're right. The market came down. If you're wrong and it went up, you get in again and wait for it to come down, then you're still right. Which RSI you use, which moving average you use, whether you wait for a market reversal alert EA indicator, or whether you wait for a parabolic SAR cross or a whatever, irrelevant, all irrelevant. Because all you're ever going to do, you're going to come to the conclusion, I want to use X EMA because a backtest told you. The backtest is never going to happen again. Stop worrying about individual settings. They're irrelevant. Am I going to make a video on the strat? No, I don't think I am. It's called the Bootcamp. This is, look, this is it. So watch the Bootcamp. When you get to the strategies section, and you get to the mean reversion one. Okay. All right. So replace that with 90 and 10. And instead of the, I haven't even put a number there, but instead of the 21 or the 14, replace that with a 2. It's this. I'm not doing anything different on that account than this. Apart from one thing, I am using 100% exits if it moves against me. Yeah. It's just a variation on the same thing. All of my strategies are based on bank movement. Yeah, banks move the market up and down. You cannot time the market when it's going to move. You cannot time the distance. You cannot predict the distance. Yeah. So if you can't predict when something's going to move and you can't predict how far it's going to move, the only thing you have is your entry price and the risk percentage. Those are the only 2 things in your control. So if you get in at a price with a risk and you were wrong, you can get in again with another risk and adjust your price to a different level. If you can adjust your price to a different level, the next time the market comes down because you thought it was going to be there, but it wasn't, it was there, you take the money then. What RSI you use, whether you use an RSI, use a stochastic if you want, CCI, MACD, as long as there's something that tells you there's a condition in the market and there's something that gives you a signal to enter because the people that you want on your side are on your side, that's all you have. A system is made of 2 things, a condition and a signal. Yeah, the condition is market's moved. The signal is it's coming the other way. And then you have risk and exit. 4 things in a strategy. Every strategy on the planet has those 4 things. And if it doesn't, it's not a strategy. Because if you have something that is only a signal, that is just random. You are just saying, when something happens, do a random thing. We are saying we need something to have happened and we need to observe something else happening. Now we will get in. That's a strategy. And it doesn't matter what you use. Position trading methodology works on any strategy, which is why I didn't invent, but I built the Position Trader EA. The idea of this EA is that you can turn any strategy you trade or want to trade or have seen into a position trading strategy, because it will have a failure rate and a success rate. The failure rate is what loses you money. Remove the failure rate and change it to a success rate. And that strategy, whatever it is, a Bollinger Band exit entry strategy to mean reversion, whatever it is, it will work as a position trading strategy, because the signal and condition will be wrong 55% of the time. What we do is we turn that 55% into positive P&L by going, oh, well, we were wrong this time. Let's wait for the next one. Look at a Bollinger Band as an example. Let's use a parabolic SAR and a Bollinger. Yeah. Oh, God, you can't see that. So my strategy is actually get rid of the parabolic SAR, that's useless. But when the market moves outside of the Bollinger Band, I buy. When it moves outside the top, I sell. So if I bought it there and I'm looking to trade it back into the parabolic SAR or into the mean, and it doesn't work, I can either choose to lose money, or I can wait for the next instance and do the same thing, and the next instance and do the same thing, and wait for price to get to where I thought it was going to get to. So instead of taking 3 losses, because you would have lost there as well, you just take a win. So if you want to trade that strategy with the Position Trader EA, you just add the Position Trader EA onto the chart. When it gets outside the Bollinger Band, you press the buy button and let it do its thing. That's it. It doesn't know, that strategy, whether or not this is the right time to do it or not. And the Position Trader EA doesn't. But what the Position Trader EA does is just move your price and wait for the market to go in your direction. That's all it does. Nothing clever, nothing complicated. It's a very simple strategy. Position trading is about putting an edge into the market. We don't know when the market's going to change direction, do we? Thank you, Danny, for the $5. Australian dollars as well. I'm adding to my currency portfolio. Thank you for that. Very much appreciated. Were you paying me for a video then on the strategy? I think you just got it. But yeah, that's it. Thank you for that. Very kind. 5 Australian dollars. I've no idea what that is in pound. Never work it out which way it is. No, it's our secret. There's only 68 people in here, Franco, so I think it's safe. You watch all the conspiracy theorists now. He's just given away the strategy. The banks know that now. So what they're going to do is every time RSI2 gets extended, they're going to push it a bit further. What are they going to do? Continuously push it further forever, because they know that we're scaling in, so they can't ever move it back the other way, which means they're going to go into constant drawdown. It's not going to happen, is it? Just change RSI to 2 on the daily and 90-10 with 1% as TP. Yeah, perfect. So let me open the VPS. I'll show you my settings, but they're in the Telegram anyway. So ignore that all time. This is just that was testing on 5-minute that I was doing with this strategy. It doesn't work on 5-minute. Don't do it. Well, that version doesn't work on 5-minute because it gets in too close. If you used a bigger ADR spacing on 5-minute, it would work. But this is this is what I'm running basically, and all it is 1.5 ADR drawdown. So if you get into a trade and it goes 1.5 ADR against you, you shut it. Yeah. Don't forget you're taking multiple positions. So it's not going to shut them all. It just shuts every trade that gets 1.5 against you. It's using a 1.25 lot multiplier. So it builds a position fast. The idea behind, and again, I've tested it without a multiplier, still works absolutely fine. But the idea behind the multiplier is if you've got an RSI move that's strong, the market usually does one of two things. It either accumulates and bounces or it just bounces. When it accumulates and bounces, you build up a big position, which means you get out a lot faster. So, but you don't have to use a multiplier. Again, it's up to you. Test all of this. Prove it to yourself. Exit strategy, I go for 1.25%. So I'm risking 1% over 1 ADR. And I get out at 1.25%. So I've got a positive R ratio. If it's multiple trades, I've set it to 5% as a target. So the reason I've set it to 5% is I come in and check, as I did there. Yeah. If I'm not here and it goes 5%, I close it. If it's got, it closes it if it's multiple trades. But what I do is I check it every 4 to 8 hours. And if there's a nice chunk of cash there, so if I come in, go out for a walk with the dog or whatever, come back in, and if that is sitting at 1.9%, I will just hit the button. Stick it down there. If while I'm out walking the dog, it hits ADR 150, it will get out. But again, set that to what you like. It's entirely up to you. There's no right or wrong. I have no idea whether it's better to get out at 1, 2, 3, 4, 5, or 10% because I don't know where it's going. But if there's a propulsion gap here, and when I get there, it's at 1.9%, it's probably going to hit the propulsion gap and bounce, isn't it? So doesn't it make sense to do that? This is you're trading. This will alter. This is a dumb, stupid, blunt instrument that will do what it's told. You are clever, and you can see that there's a propulsion gap that's been tested 3 times. We're just approaching it with 1.9% profit. What do you think you should do? Hope or take? These are the decisions you make as trader. Yeah, so the RSI entry is 90.10 on the daily. I'm using the close. Median works. Use whatever you like. Entry, I'm using the 5 SMA, the 5 period smooth, not the 9, because they all work. 9, 7, 5, 21. But what I want to do, because I'm spacing 0.1 ADR apart, I want to get in fast. Yeah, so I'm using a 5, a very, very fast MA, because it's an intraday strategy. Idea is I want to be in that day and I want to be out today, or I want to be in today and out tomorrow. Yeah, in there, out the next day. Got it totally wrong. Look, missed half of that move. Do I care? No. Made 9.65%. I mean, admittedly, that was a massive day. This is the thing. This is when you get a load of movement. So we had a massive day on the Swiss franc on Friday, and other currencies moved a lot. Those days, you bank the lot. These are the days where you're suddenly going to get it making huge percentages. Yeah, it's just, but it's the same strategy as H1M5 mean reversion, H4M15 mean reversion, except I use my bread and butter strategy is using much smaller risk over much longer periods of time. This is a scalping strategy. Yeah, you are in, you are out. But that's the settings basically. Don't think there are any other settings, is there? That's important to that. So RSI 1%, lot multiplier, but again, use what you like. But backtest, you know, you can backtest all of these system parameter permutations. You'll find money. It's all out there, money. That pound's not very happy today, is it? What is the moving averages? Why is the moving average useless in Forex? It's not useless. I use 2 moving averages from the daily time frame, but it's useless if you're a mean reversion trader. And it's useless in the fact that, I mean, look at the moving average on the pound New Zealand. Here it was useful. Here it's useless. Yeah. So the reason people fail when they try to trend trade, there's a video on the website that will explain it to you in more detail, which I'll put a link in now, but watch it later. That one, mean reversion versus trend. Yeah. So the reason people want to become trend traders is because they want to get the big moves that pay the big bucks that only happen 20% of the time. So 80% of the time you are wrong. Psychologically, as a person, you are not programmed to be beaten up, shot, stabbed, get it wrong, die constantly 80% of the time. You're programmed to want to take money. If you become a trend trader, you are wrong 80% of the time, 70% of the time if you're good. Because to get onto these, you have to first of all see a trend establish itself, which means you've missed it all. Pull back, enter, and then get out. But because you've lost 80% of the time, because moving averages, most of the time the market spends 80% of the time it spends itself going sideways, 20% of the time trending, or 30, depending on who you listen to. But because you've lost so much money there, when you get into a trend and it actually works, you get out here when a candle goes against you because you've got to pay for all the losses. You end up in a cycle of, yes, I've got a winner, but I've got to get out because I've got to get all my money back. You'll never hold that. And also the fact that that takes 2 months to play out, just doesn't work. So if you use a moving average, it's great if you know the direction of something. Yeah, and as I've just said, you cannot predict when something will change direction, and you cannot predict how far that move will go. So therefore, when will this cross below the moving average and become a downtrend? Yeah, so here you bought it. Why? Because it's a moving average bounce. So you bought it, bought it, bought it, bought it. It took 4, 5, 6 weeks for that trade to play out. Well done. So if you bought it here, you put your stop loss there, or whatever, you might have got maybe a 4 or 5R out of it. You bought it there and it collapsed because the trend changed direction there. So from there to there for 1, 2, 3, 4, 5 weeks, this thing was telling you to go long because it's above that moving average. For 5 weeks, you were going the wrong way because it's coming down. So everyone goes, no, it's a bull trend. That's not a bull trend. It's a massive drop. Look at it. And then it slammed through there and you're like, right. So now I need to short it. We go sideways for 6 weeks. Oh, mean reversion traders are getting profit, 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 profit. So I mean, that's why I think they're useless. On the S&P 500, fantastic. Yeah. If you stick a moving average on the S&P 500, not that one. I haven't got a thing. But yeah, stick a moving average on that. It's designed to go up. Yeah. So that's why Larry Connor's RSI2 strategy used a 200 moving average, because stock markets are manufactured to go up. Yeah. If a stock loses money, it drops out the S&P 500 and is replaced by a stock that is making money. So as long as stocks and companies are doing their job, providing profit for their shareholders, the stock indices will do nothing but go up. So you use the 200 moving average to tell you when there is a bear market. But that moving average will tell you there's a bear market somewhere around there. Whoops. Even in the S&P, which does nothing but that, moving averages aren't particularly good, are they? Yeah. Think about what a moving average is. So this one here that you can see on the pound New Zealand, this one here is the 72-day moving average. So this is the quarterly moving average, 72 trading days in a quarter. Yeah. This is telling me at this point in time what happened 72 candles ago. What was the average price in the last 72 candles? What the hell has that got to do with right now and my decision-making process? Nothing. This moving average here is telling me what happened 72 candles ago. And also the other one that's coming down the top of it is telling me what happened 24 candles ago. What's happening tomorrow? I have no idea. So what's the point in using that? Something that tells me what's happened 72 and 24 days ago, or maybe a 200-day ago moving average. How's that going to help me? Useless. By the time you see a moving average tell you there's a trend in place, you've missed the trend. It started way back here somewhere. Missed it. The only time they're really useful is in things that go parabolic trends. I mean, this has probably done it twice in my lifetime. 3 times maybe in my lifetime trading, 16 years. I've never seen moves like that. Just, it's pointless. They're useless. Yeah. Buy it, buy it, buy it, buy it, buy it. Why are you buying it? Because it's above the moving average. Coming down like a steam train. But that's just my opinion on them. Yeah, that's why I don't use them. I like to use the 72.24 because there is an argument in a trend for bounce plays out of these moving averages, because the market moves in quarterly cycles. So banks, institutions, hedge funds, pension funds, they all work on quarterly targeting. Yeah, they report quarterly, they get paid quarterly commissions. Banks and institutions all work in the same way. So the idea behind using a 72 moving average is to see where the quarterly cycles are. If something has the same fundamentals this quarter as the last quarter, what will happen is you'll have a profit take pullback and then they will carry on that cycle, which is why the 24.72 moving average, not so much on the US dollar yen because of the intervention. Again, stuff like this, moving averages, no indicator on the planet has anything to do with anything when there is an intervention. Yeah, when the fundamentals shift on the euro and the euro decides to flip short, everybody that sees the moving average going up will still carry on buying it for the next 6 weeks before it then flips short. By that time, they've missed the drop and the euro come out and say, actually, we're going to freeze interest rates. So it goes like that. But they'll be shorting it while it's doing that because they're not paying attention to the fundamentals, the thing that drives the thing up and down. All these do is tell you what the fundamentals were 24 and 72 days ago. Got nothing to do with the fact that the CAD and the euro are changing their interest rates this week. Do you think these moving averages are going to be respected? And the other thing about moving averages is you can change them. So you see people out there using these secret moving averages, the 42 EMA. No one's using it. Why are you using it then? Because they get respected because people see them and they use orders at those levels to enter. So you're using something that is secret. What you've done is you've found that the 42 moving average over this particular period of time worked better than the 24 and the 50 or the 30 or the fit or whatever. Doesn't matter, does it, what the number is? But you've curve fitted a line to fit where the market moved over that period of time that will never be repeated again in the future. Useless. All useless. Get in, get out, adjust your price. It's all you can do. It's all you can hope to do. But that's, I've tried to trend trade. I dropped trend trading quick, very quick, on all time frames. The 5-minute time frame was the most successful trending time frame that I could get into because it went into trends a lot more. That move there on a 5-minute time frame will have, on a 15-minute time frame as well, will have a beautiful, it will respect a moving average a moving average. I don't know which one. It will respect one of them really, really well. But again, with a 20, a 50, and 100, like Steve Mauro, the Mayo, the ketchup, the whatever moving average strategy thing. Yeah. Why did he have 3 strategies, 3 moving averages or 4 moving averages? Because he had no idea which one would work, but usually one of them will. Fantastic. So buy that one if it doesn't work, buy that one if it doesn't work, buy that one if it doesn't work. Eventually it will work. Don't buy it, lose money, buy it, lose money, buy it, lose money, because it might come down here and you buy it, and that's the one that works. So all you've done is taken a 3% loss on your account. You missed the trade that worked. Lunacy. Pointless. Should you show for 1 second the settings you use for the SIH EA? So all I'm using is 3% equity, 0.3% equity risk. Range sizes are normal, but I'm using a 1 and a 3R multiplier. That's all. The only thing I've changed is that. TP1 and TP2. So I'm using 1R and 3R, whereas I was using 3R and 5R. So I've done, the strategy is exactly the same. All I'm doing is because this thing is spending, again, you know, we're talking about trending, breakouts, and this thing is spending the vast majority of its time doing this and then going nuts. It's doing this more than it's doing that at the moment. This is changing. It's getting better, but I'm finding that's working a lot better. 1 and 3R. In, out. It's a scalp. It's an opening range. It's a quick scalp at the open, basically, is all I'm doing at the minute. So normal settings, 1 and 3R. But again, this is not, go and back test it. You'll probably find if you back test it over 2 years, it doesn't work. You've got to adapt. You can't just, there's nothing that works all the time. Look at ATR. You stick the ATR indicator on any instrument, yeah, on the daily time frame, and look at the volatility and the change, yeah. So the ADR was up here, then it was down there. A strategy that uses any strategy that works in that market regime will not work in this market regime. When it's quiet and calm and not moving a lot, it's going to have a completely different result to when it's going mentally huge moves all over the place. This is why we use ADR for all risk, because the ADR, the average true range of any instrument, not only changes instrument by instrument, it changes week by week. If you don't adjust your risk as the instrument is adjusting its movement, you'll get flattened. That's why we use ADR, why we measure ADR, why we look at exactly good timing dashboard. Pound US dollar, just hit ADR. So it's hit its average daily range. We know that there's a good chance it won't go much further than that, because we know statistically 58% of the time it stays within that range. So, you know, you've got to change. Look at the ADR on this thing. Look at Liz Truss changing the fundamental way that the UK works, and then Bailey going, "Are you mental?" And her getting sacked. Your strategy at that time, my strategy was using much smaller lot sizing, because this thing was going crazy. So I don't want to put too much risk on. When it's hardly moving, you've got to put more risk on, because to get money out of small movement, you need to risk more. Otherwise, you're never going to get to a target. Look at it at the moment. It's the lowest ADR it's been forever. We're sitting at 58 ADR on this. It's tiny. Moving 60 pips a day. Back here, it was moving 200 pips a day. Using the same strategy on something that moves 60 pips and something that moves 240 pips, you're going to get completely different results, aren't you? That. Pound yen's just hit ADR. Pound is collapsing today. I'm not quite sure who's upset the pound. PMIs. Just come out as a slight miss. Just the pound moving basically today. Lippy, thanks for the 5 Swiss francs. You're paying me in Swiss francs. That's the only Swiss that I'm going to be getting this month. Thank you very much. Much appreciated. 5 Swiss francs. I don't think I've ever had a Swissy before. Danny, I'm going to try this out on a demo account. Been using 14 RSI on hourly with 75.25. Been profitable. Yeah, you will be. This is the thing. What is the best thing to use is different every day, week, month. Yeah, this is, people keep saying, what's the best RSI to use? When should I change it? I don't know. No one can know, but you have to use something. This is the thing. You've got to use something. The bigger the number and the smaller the RSI you use, the bigger that move has got to be to get you into a position. So the safer it is likely to be, because to get an RSI 14 above 90, the banks have got to be pushing bloody hard. So the chances of them exhausting and not finding any more sellers and eventually turning tail and taking profit on that move is much higher. But you may get 10 trades a year instead of 200 trades a year. There is no right, there is no wrong, there's different. What would you rather have? 10 trades with 100% success rate and no more than 2 trades in a position? Or would you rather be in all the time? Yes, take some hot drawdown at points, but be banking every week. Who are you? Are you the guy that's got to bank every week, or are you the guy that's got to return 100% on his account this year? Both will probably be able to do it. One of them will do it in a different way to the other, but neither of them are right, neither of them are wrong. They're different. The position trader EA, the market reverse alerts EA, execute whatever strategy you want in the way that you want to do it. You backtest it and you see what impact it has on drawdown, profit, number of trades, all the information that we can get out of the position trader EA and the export facility will tell you how deep you would have got, what would have happened to you. So if you're the type of person that doesn't like drawdown and doesn't want to be in more than 2 or 3 trades at a time, you probably want to set your drawdown control to be 2 ADR and shut 70% of your position size out. If you're the type of guy that doesn't mind getting into 30% of drawdown, knowing full well you've tested on everything and it works really well, but yeah, 30% is the price I pay for getting 100% return a year because I want to bank every day. You won't do that. You will use a different drawdown control and you will use a different RSI level probably. Nothing is right. Nothing is wrong. Everything is just getting in, because I have no clue if this is going to hit last week's low, which was the previous week's low. Yeah. Which is the top of that propulsion move that drove and broke that. I have no idea if it's going to hit that and bounce, or if it's going to slam straight through that propulsion gap and test that level, or come here today. That's 225 ADR. Chances of that are 2%. But there's a 2% chance that that will get hit today. Highly unlikely. 98% chance that it won't. But I don't know. I'm looking to get out here because it's this double bottom, which is where that move started. So I'm assuming that move is over and that is going to get undone. That's why my target's there. But if it hits that at 125 ADR today and I get an alert from the dashboard that says 125 ADR, I might shut it. I don't know. But is it right or wrong to do that? I don't know. I can't give you an answer as to whether or not it's right to get out at 125 ADR or let it drive down to 175 today. I have no clue. This is the thing. Every system or strategy teaches you this. It's never the same. I did an AI thing. I've just paid for ChatGPT 4. And I did over last week, I did a little test on it. I took a screenshot of 15-minute chart. It was a 15-minute chart over 5 days. It's longer than that. That's about it. So I took a screenshot of that, not that, but a screenshot of a chart. And I put it into ChatGPT and I asked it to find me the same pattern again on there's a Dukascopy data that you can use to do this. Find the same pattern again over the last 4 years. 4 years, 5 years. I can't remember what I said. I did it last week. It doesn't come up. There is no pattern recognition of the same thing. That's the point I keep making, is that even if you give it a variance, it's unlikely it would find the same thing. You can't find this pattern again on a chart. Go back and look and try and find it moving from there to there, that distance, and pausing for half a day before it moves up by 1 ADR, and then it sits around and does nothing and moves 3/4 of an ADR. There is no pattern that's the same, which is why every backtest you do is wrong. It's never going to do what it did in the backtest, because that's never going to happen again. Yeah. And I've been delving into this AI. I said a few months ago, people always ask me about AI, and I'm like, nah, it can't replace a human being. It can do a hell of a lot. I've discovered in the last couple of weeks that is very, very helpful for finding out information about historical movement. And I think there is an argument for using AI for bots in the future to try and not so much build a strategy, but execute an edge based on risk. Because that's basically all we have, isn't it? Because we don't know which way the market's going to go. But it can analyze in real time data like no other human being can. But its conclusion is going to be the same. It will not know which way this is going. It can't do. No one can. Not even an AI can do that. But what it can do is look at statistics of a double bottom being within 10 pips over a period of 3 weeks, having not moved more than 2 ADR distance, historically look at information where that rough thing has happened in the past and extrapolate whether or not the likelihood is of a breakout happening or not, and make a decision based on that, because it can do pattern recognition way faster than anything else can. Yeah. And you use these trading view charts to do all this stuff. So you can, in effect, use different data as well from different brokers, which again will give you a different result. Yeah, if you do a test on Dukascopy and then do a test on Alpari with exactly the same system and strategy, you'll get different results because they got different price quotes. Yeah. There's too many variables. That's kind of what I'm trying to say. But yeah, test it, Manny, and use whatever you want. But the beauty of the RSI 2 strategy and why I kind of like it is it banks every day. So there's always something going your way. There's always something that's going to be sitting in a nice amount of money. And the other nice thing about this strategy is where you can add it all up. So I can take that 0.84, that 0.96, and that 0.5 and bank 2.25%. My target was 2.25%, but those three together have made it. So I'll take them. Great, isn't it? Position trading, portfolio trading. It's the way to do it. It's the only way to do it. Alex, €10. Thank you very much. Danny, keep your Playmobil money for yourself. It only takes real money. Oh, dear. Don't get into an argument. Take your Playmobil money. You should have said Monopoly money, Alex, but thank you very much. €10. Much appreciated. Just a small sign that your efforts of sharing knowledge are greatly appreciated. Yeah. Thank you, Lippy. Don't start fighting. Are you using a few pairs for the RSI2? Yeah, so basically on RSI2 at the moment, I'm only using can't see them, can you? I'm using US dollar Swiss, pound US dollar, euro US dollar. So basically I'm using everything. So there's no yen, and there is one Swiss. So it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 21 pairs. Yeah. So there is no yen and only one Swiss. No, sorry, there's no. Sorry, forget that. No, there's no yen. No yen. So it's all pairs. All pairs but yen. That was the decision I came to. Because when I did the portfolio analysis, which is on Discord, where did I put that? It's on Discord somewhere. I did the portfolio analysis, and yen's, it was awful. But the Swiss, it came out overall profitable, but not great. Where the hell's that gone? The trouble with having a Discord server with so many channels, I can't find anything. But yeah, so basically, my analysis was all the Swiss pairs. Just reading my analysis results. Yeah, so all the yen pairs, there was not one profitable with any exit strategy. End of day, 1%, 2%, whatever. They were not. There was not one profitable. They didn't blow the account, but they just didn't make any money. So there's no point in using yen. So the Swiss, it was about 50-50 as to whether or not it returned a profit or it returned a loss, but overall was profitable. So I'm just trying to find the analysis. Yeah, so you can't really see it, but the Swiss pairs, that's the Aussie Swiss, CAD Swiss. So Euro Swiss didn't lose money. It did lose money because this was a 50k test and it came out at 47k after 4 years. So it didn't, it's not the end of the world, but it wasn't profitable. The Swiss yen, minor profit. Pound Swiss, nice. New Zealand Swiss, not too bad. US Swiss didn't make money. Yeah. So that was the reasoning behind using the Swiss pairs, knowing full well that it's probably not going to make money on a number of them, but the others will outweigh it long term. But there was an argument also for dropping the Swiss franc because you would experience fast, hard drawdown if there is a safe haven run on the Swiss franc. So, this is, yeah. So that's a yen pair. Look, that's the Swiss yen. Oh, sorry, that CAD yen. Euro yen, just about eke to profit. That's the Swiss yen. Pound yen. See, like so much stagnation in the yen because it trends too much. But do your own testing. This is the beauty of the Position Trader EA. It's so fast. You can do your own analysis, your own testing. Let's say you decide to go live with real money on RSI 2. You will, I'll still trade H1M5. Yeah, I'm not going to change. It's adding. The reason, as I said, I looked into RSI 2 is as a addition to the current market climate and conditions. Position trading H1M5 and H4M15 has become more difficult because of the interest rate freeze. So we're getting to the point now of the market doing this all the time. Yeah, because it's just not got any directional bias. It has a bit of news and it moves and then it gets stuck again. Those bits of news we can get out on RSI 2s. Yeah, so it generates revenue all the time on these little daily movements. So let me stick an RSI2 up there as well. Yeah, so this is a 4 hour. So, you know, this hasn't been going anywhere, really. Bit of movement there. But this pound US dollar hasn't been going anywhere for 6 months. Yeah. On the daily time frame, which isn't one we trade, but you've had one signal there, one signal there, one signal there. Yeah. So in the last 3 months, you've had 3 signals. Yes, 100% strike rate. You shorted it there, beautiful. You longed it there, beautiful. You're short at the moment. Yeah. But look at the RSI2. In a market that isn't moving, the RSI2 gets you in and out on these intraday spikes. And the advantage of the RSI2 is if you get like this here, for example, you get 1, 2, 3, 4, 5, 6 bull days in a row. Doesn't matter. Yeah. Look at the wick and look at the movement. So there's your low, there's your high. This thing opened here, pushed up, and pulled all the way back down. If you're scaling in there on the hourly time frame, you're out on that wick. That wick there, you're out on it. These days, you're in trouble. There's nothing you can do about it. But as long as it doesn't move 3, 4, 5 ADR against you before it does that, you're again not in trouble because you're shutting positions out 1.5 ADR of movement. That day there, for example, was 58. That day there was 82. So that's 1.5 ADR. So if you shorted it there and shorted it a couple of times because it moved intraday, you exited one position, you've still got 2 on. It pushed up again, you got in, you got in. You might have exited that one. So you've taken 2 losses, maybe 3 losses on that move. And then the 1, 2, 3, 4 there, you make money on. So if you take a 1.5% loss 2 to 3 times before the 5% drop, 2.5% profit. Just works. It's because the market moves intraday. This candle here, you would have been in and out on that day. It hasn't gone anywhere. Look at it. It dropped and then it didn't go anywhere for the entire month. That day, you're in and out and made a profit. That day, you're in and out and made a profit. That day, you're in and out and made a profit. That day, you're in, you're out and made a profit. See what I mean? All this sideways movement that we've been experiencing since these interest rate freezes, this thing's been clearing up, absolutely clearing up. Now, in a trend, and I've tested this over 8 years and through COVID, in a trend, it still works because intraday, that candle here, for example, so there's the high, there's the low. Look at that wick. Price pushed up, went nowhere for 4 days. That's enough movement to make 2 to 3% out of. It did get there. Look, RSI 90 that day. Yeah. We got an RSI 90 short that day. You're in, you're out. You're done. Intraday. This is the beauty of it. It's such a good strategy. But this is not Larry Connor's strategy. This is my variation of it. So I'm using RSI2, but I'm using the hourly time frame. I'm using multi-time frame analysis to profit, to create the edge. Larry would get in here, then he'd get in there, then he'd get in there, and he'd keep getting in until he got out. But he was riding S&P 500 trend. We're not riding trend because we're not in an instrument that trends. We're in an instrument that mean reverts all the time. So it's an adaptation on a trend strategy converted to mean reversion using multi-time frame analysis and position trading. Yeah, so it's totally different to Larry Connor's strategy. The only thing I've nicked is the RSI2. Well, I haven't nicked it because it's not his indicator. It's just the RSI, isn't it? He just decided to input a 2 instead of a 14. That's it. But the opportunities in a quiet, dull month. Summer trading, yeah? We got summer trading coming up, starting in July, yeah? Notorious. 6 weeks, 2 months, like pulling teeth. Sit there forever, waiting for some news, and then the news goes, that's it. It's awful, isn't it? Summer trading. Terrible. This is why the banks take the summer off. It just doesn't move. This thing is going to kill it. Absolutely kill it. Because it's going to move up and down all the time. The banks and institutions are still executing orders all the time. It just doesn't go anywhere. There's no price movement long term. Intraday, it's all over the place. That's why everyone on the 5-minute time frame gets killed. Everyone's going, hey, go long, go long. Oh, no, go short, go short, go short. Oh, no, we're dead. We're not. They are. Yeah, it's beautiful. But we're waiting to see. You know, it's back testing and forward testing are very different things. So at the moment, my forward testing is doing what the back testing did. So we will see what happens. But looking positive. Quite exciting to find a new strategy, and it's nice because it's not a new strategy. It's at the same time, it's just a variation on what I've been doing for the last 5 years. It's just a different way of doing the same thing, isn't it? But it's just all it's doing is it's finding more edges. It's finding more opportunity with the same methodology. But I won't drop H1M5 because that's bread and butter, has been for 5 years. That's what pays the bills. So I'm not going to drop that. I would say if that new variation is better long term, if I trade it for a year and it's like just outstripping that completely, yeah, probably shift. But why would you shift? Why would you not run both alongside each other and make even more money? That's the whole point of portfolio approach and diversification, isn't it? You diversify with multiple strategies. When one's failing, the other one's working. You use a trend strategy with a mean reversion strategy, with a breakout strategy. Doesn't matter what market regime we're in, whether we're breaking out, we're trending, or we're mean reverting, one of them is making money. If they all use a positive R risk reward ratio, you're making money most of the time because the market spends 80% of its time in mean reversion going up and down and not really going anywhere. It will attempt breakouts during that period and occasionally get into a trend. So your mean reversion strategy works most of the time. Your breakout strategy, if you do it right, will work to a certain point, even if the breakout fails. Your trend trading strategy will continuously lose. So if you've got 1 out of 3 strategies losing and 2 out of 3 strategies making money, even if it's a 1.5R and a 2R, it beats the 1R. That's why people have, and banks and institutions and pension funds use diversification, because you're never going to get a strategy working all the time. If you've got 3 strategies which match every market regime, one of them is always going to be generating profit. So it would be a case of adding this to the portfolio of strategies. Same way as a trade SIH, an ORB. So that is a stock index opening range breakout strategy. Totally different to H1M5. Nothing to do with each other, but they are both profitable strategies long term, and they have nothing to do with each other, and they don't counteract each other at all. So add the more strategies you have that have a long-term edge and work, the better. You just need more capital. That's the difficulty. What you will find is if you've got 20K to trade with, how much do you put into each strategy? You don't know which one's going to work. How do you pay the bills? It's difficult now. Have you backtested RSI2 on the indices? No. Well, we know it works on the indices because that's what it was designed for. But it's I haven't tested any indices yet at all. No. The indices. It's a long only strategy. So Larry Connor's original version was a long only strategy. It never shorted, never took a short ever. Yeah, because stock indices go up. So at the moment, we are not, well, this is the question, isn't it? So are we back in a bull market? Yeah. So we've just been through the largest bear volatile period we've ever experienced in the stock markets. After a pandemic recovery while businesses were losing money, are we now back in a bull market? Or are we going to falter as interest rates rise and go back into a bear volatile? If we're going to do this, strategy will kill you. If we are back in a bull market and we're going back to the good old days, it'll be absolutely killing it. So what's the answer to that question? Nobody knows. We've just made a new high last month. Yeah. After a pullback, which happens all the time. This is where Larry Connors and all the successful market wizards and traders make their money. Yeah. It's engineered to go up. It doesn't go down, because if it goes down, it means all businesses in the US are failing. They don't do that. So, however, they do that when there's been a pandemic. We've never had one of those before. So this is why this happened. We've never done this before. All gone wrong. Why is everybody showing P&Ls going through the roof and massive shareholder payouts when the business is shut? Yeah, pandemic, we shut. No sales. Companies losing money. Stock prices going through the roof. That's what caused the bear volatile crash, because this recovery after the pandemic was not a recovery. That was just all fake. It was all just buy the crap out the stock market. Couldn't sustain it, could it? So is this now back in normal? We don't know, do we? And what happens when the next war kicks off? You know, there's so many things, isn't there, in trading that impact what happens. So, but yeah, stick a 200 MA on there, long only, buy the dips. So buy the RSI2s, the downside. Test it. I haven't tested it, but I'm 99.9% sure it'll work, because that was his strategy. So that's where it all came from originally, isn't it? End of day close. Again, you can't test that with a position trader EA. And Larry didn't use an end of day close either. He used an RSO. So Larry's variation of the strategy. Oh, that was the other exit strategy I used. Exit criteria I used. I forgot to say. So his exit criteria were entry, exit. So you exit opposite signal. Yeah. So that, again, I tested that as well. Again, no advantage. Yes, sometimes it's better to exit opposite signal. Sometimes it's better to exit close at end of day. Sometimes it's better to exit a percentage. Sometimes it's better to stay in the thing for a month. You know, it's just impossible to tell. But that was his exit criteria, was enter there, exit there. So when the S&P 500 is doing that, enter, exit, enter, exit. That's the ideal. Obviously, that never happened. Your job is to take that. Yeah. When the market moves, you take the meat out the middle. You never get that. You never get that. You get a bit. Which is why trend traders always fail, because they're always trying to catch that. You're never going to catch that, because you've no idea of turning. You can't tell when that's going to happen. You can't tell when that's going to happen. But when it's on its way up, you can see it's on its way up. So you take a little bit out the middle and you be happy with it. And no one's ever happy with it, because they've lost 80% of their money. So they need to get it back. That's why it doesn't work. Trend trading. I don't know any successful trend traders, and I've never met one. I've seen a lot of people teach it, and I've seen a lot of people show strategies. I don't know anybody that makes money out of it. Just don't. It's not using moving averages. I mean, obviously there's other ways, but yeah, anyway, that's the way that he did it. I'm thankful you haven't been possessed by ICT SMC. Yeah. I did for a period. That's why I'm not doing it. Because it doesn't work. Prove me wrong, somebody. I would love someone to come up to me and show me a 12-month P&L of a strategy that works on smart money concepts, that is consistent and makes money, and they've been doing it for 12 months. I think the problem is, it might well work long term. The problem is it has so much failure rate in it that no one actually does it for a year to see if it is profitable long term, because they've given up after the losing run. That's the problem with it. I did. I didn't even get through the whole thing. I just couldn't do it. It's too complicated. When you overcomplicate something, when there's so many moving parts to the strategy, it's impossible to backtest it, because there's so many moving parts which mix so many combinations of possibilities. There is no way of those possibilities that were profitable ever being replicated. Even with an RSI, you've used an RSI blank with nothing else, like Larry Connors did. Yeah. The RSI hitting that level twice a year isn't going to happen again. That exact number, it will hit there, it will hit there, it will hit, I'm drawing off the screen, it will hit there, there, or there, or there, or there, or there. And this is what a system parameter permutation test is. I've tested a variation. All variations work. You just can't pick which one is going to be right, because it's random. It's generated by that day's worth of movement, or that week's worth of rally. That week's worth of rally was caused by a fundamental that is not here now. ADR back there was 2 times what it is here. You're not going to get that. It's not going to do that, because this is not this. But if you have one indicator and one exit strategy, you can replicate that and test different permutations of it, and you can be 90% sure that will work in the future, because there's no other variables. If you stick, it's got to be above a moving average, it's got to use a moving average cross entry, it's got to use this, that, and the other, it has to have a stop here and a t. Once you've got 7 things that have to line up to get into a trade, you've got to rely on those 7 things happening again in the future. If you've got one thing getting below the 90 level on the RSI that's got to happen in the past, and every time it happened, it worked, probably likely to happen again, isn't it? At least with a percentage high enough that you can make money out of it and produce an edge, which is why I have very little rules in my strategies. RSI gets extended, I wait for the sellers to enter. What happens next? I don't know, but that's it. I have a condition, I have a signal. The rest is completely up to what the market decides to do. That's the only thing I have. Larry had 1. He had a condition which happened to be a signal as well. End of day, in, out. Job done. That's why it worked, because it was simple. You couldn't get it wrong. At the end of the day, before you go to bed, have a look at a line on a chart. If it's below a certain number, press a button. Go to bed. Wake up next day. Same time before you go to bed, look at your chart. Is there a green P&L? If so, close it. Is there a RSI above a number? If so, sell it. Go to bed. Get up next day. Can't get that wrong, can you? I can literally teach my dog to do that. She's not that clever, though. She rolled in a cow pat at the weekend. We went for a really long walk around where we live, and she found a cow pat. And it was one of those cow pats that was obviously less than 24 hours old. Car journey home wasn't fun. Those zones marked in grey, are those imbalances? No. I don't know. Yeah, I suppose if you want to call them that. You're reverting to ICT SMC concepts, which are, if you want to call that an imbalance, I guess, I don't know if you want to. You can call it a propulsion gap, you can call it a wide range bar, you can call it a fair value gap, you can call it an imbalance, you can call it a large bank order, you can call it a propulsion candle, whatever you want to call it. It's just a big movement in the market that creates a void that the market couldn't get back to because the weight of buyers or sellers is higher than normal. Yeah. The market uses is a magnet to them. Market comes back and tests these levels. Yeah. So at some point, it's coming back to this one now. Yeah, they bought it. Why? Because that's where they bought it from. It's not rocket science. It's just observation. They sold it here. So when we get back there, either the sellers are in control of the market or they're not. But either way, it comes back here. People that sell you courses will teach you the mechanics behind it, or the reason it is so good and how to benefit from it. All I can tell you is they act as a magnet. What happens when we get there, I can't tell you, because there's a 50-50 chance of it either going up or down every candlestick. Yeah. So when it gets here next time, if you want to sell it and put a stop above there, feel free, but that stop will get triggered, probably with a 50-70% likelihood. Yeah. You know, it's random. The reason this propulsion gap imbalance wide range bar was formed was because multiple banks and institutions at the same time executed large orders in one direction. Why they did it, how they did it, who did it, I have no clue. Does it impact my decision-making process? No, because I have no control over it. If you try to go, I'm going to get short there because a statistical probability said that if I do that and put a stop there, you will fail, because when you get there, you have to understand one of two things is going to happen. It will go up or down. And because that happened has no bearing on what happens when we get here, because that is the past. It's happened. And when we get here this time, it's the now. Yeah. How many orders are positioned long and short in banks at that price point when we get back there? When are we getting back here as well? We're getting back today, tomorrow, in the next 3 weeks? Somebody will sell you a course and they will say that if the price pushes down and returns there the same day, you can short it. If it returns there tomorrow, the trade is invalid. I can show you that that happens 50% of the time in both cases. So why did they decide to do that? Because they can sell you a course on that. Who makes money? Them. They have no clue as to whether or not that has statistical advantage or not. You can do a back test, which will tell you how many times that's happened in the past, but that's got nothing to do with this at all. The past, it's happened. This, find one. Probably won't be able to find one because the market's moving now. So it's going to be creating them rather than using them. Build that one. But yeah, we're running into this old one, look. Yeah. But you know, this is my problem with trading in general and courses. And this is why I did that video about courses, right? Herc, I'm not saying you've done this, but I'm using you as an example because you mentioned it. Yeah. Herc is buying here because he bought a course that told him that that propulsion gap is basically going to get tested and you should buy it and put a stop below that low. That's why Herc bought it, right? Franco bought it because that's last week's low. Yeah? So he bought it there because it's last week's low. He hasn't got that indicator, but what he did see was that's where last week closed, and a line on his chart told him that's where he should buy it from. And he should put a stop down there because his strategy tells him to use half an ADR of movement to give it time to breathe. Herc's strategy says you get him really tight because you want to make Lamborghini money really fast. Yeah. My strategy tells me that that was the low from Friday, and I should buy the low of the previous day and get out at the high of the previous day if we achieve it. And my doesn't use a stop loss, because what mine does is if the low of the day fails, I use the low of the week. And if that fails or isn't available or is the same thing, I use the low of the previous week for my second entry and I scale in. And if I have 3 positions on, my stop loss is there. 3 different courses, 3 different strategies, 3 completely different ways of losing money in the market. Yeah. One of them uses a blue bar. One of them uses a black line, and the other one doesn't use anything but the high or low or open or close of the day. Which one's right? Which one's wrong? Which one's going to make you more money? None, because the fact that that happened yesterday, that happened 2 weeks ago, and whatever has got nothing to do with whether or not this price goes up or down today, because the weight of orders long or short today is going to be based on the banks and institutions' order flow today and whether or not there's any news. The whole lot of it is a load of crap. All that you ever do when you buy a course is you pay someone for information you can clearly see on your chart. That has no relevance or bearing on future movement of price. What's the point in using it? Yeah, I use it personally for targeting because I have observed that the vast majority of the time, when it paints one of these things on the chart, it comes back to it. So if I'm getting in a position short and I want to know where it's likely to go, history tells me that it usually comes down to these big blue blocks. Why they're there? Who caused them? I haven't got a clue and I don't care. What I know is it hits them. Yeah. Call it something else and you'll sell a course on it. Fair value gap, make ICT millions. Well done. Wide range bar. The guy that invented these things, M.A. Perry, 30 years ago, called them wide range bars. My mentor that introduced me to the shadow moving average called them propulsion candles. Three names, same thing. How do you use them in trading? I don't know. You know what I mean? Everything you do in here has got nothing. Everything you put on a chart cannot help you make money. What helps you make money is risk and order management. Because when you press the button, the only thing you can do is manage that position. You have no control over it. Yeah. And every time you get in on a double top, there's a 50-50 chance that will work or not. So if there's a 50-50 chance of your strategy working, why don't you just flip a coin in the morning? You're going to get the same result. Probably heard me say that a few times now. But it's true, isn't it? It's the truth. What's your risk on RSI2? 1% over 1.5 ADR. Drag up your terminal to show pairs. What? This, you mean? Well, I've gone through that, haven't I? But again, Harold, I don't know what's the best pairs to trade. Which are the pairs that are going to respect the RSI2 strategy the best in the next week? I don't know. Everyone thinks I know how to do this. I don't know what's happening. What I know is stuff will move up and down. I have no idea which pairs are going to move. I do. Euro and the CAD, definitely, and the US dollar this afternoon. They're going to move. I don't know which direction they're going to move, and I don't know how far they're going to move, and I don't know whether they're going to trigger an entry on the RSI 7, 14, or 21. Might do it on the 2, probably will. I have no idea, though. I love doing mad trading science projects. Yeah, that's what I do. I love proving everything wrong. My job is to prove everything wrong. I have hundreds and hundreds, and I'm not exaggerating. I have built hundreds, double noughts of EAs just to prove strategies wrong so that I can convince myself that I'm right, that there is no strategy that works. Mine works, but it's not a strategy. It's a methodology of trading. It's a way of extracting money from market movement. It's not a trading strategy in the traditional sense of the term, is it? It's different. But my science projects, as Franco calls them, is what's taught me that. Yeah, it doesn't matter how many EAs I build and how many strategies I see on YouTube, PDFs I get sent. People make strategies up and send them to me, and I stick them in there and I put them in and I backtest them, and they all fail. Because there's a human being that's got to be in charge of this thing. Automation, and I can put the position trader EA on a chart, and I can run this on full auto, and I would have every confidence in letting this run on full auto because I've backtested it and it made money. But I would prefer that when this thing is up here and it's sitting in 1.5% of profit and the Canadian interest rate is about to be dropped and I'm trading a CAD pair, I would prefer to bank that. The EA is never going to put that in a backtest. And if you don't want to do any kind of intervention from yourself, that's absolutely fine. But what your backtest did isn't going to happen, is it? Because the time you were 1.9% in profit in the backtest, the Canadian interest rate wasn't being dropped for 2 weeks and they weren't changing it. This week they are. Different. All different. Turtle traders. Yeah, turtle traders. We're good. Brother, you've been on almost 3 hours, have I? Oh my God. 11 o'clock. Don't burn out my first day back. It said genius is simplicity. Exactly. So underrated in the trading world, always giving out advice. And straight facts, exactly. Backed up by data. That's only because I make money out of this. And if I don't back it up with data, I'm going to lose. I don't like losing. Neither does my mortgage, which is the problem. So you have to have it right. But I'm not doing anything different to what anybody else that's doing in this industry that makes money. Yeah. Nobody in this industry is buying courses and just doing stuff. What people in this industry are doing is research. Banks and institutions, as I said, pay analysts six figures a year. If you go and work in a bank as an analyst, you start on 60. And you go up. Yeah, scorecarders. Those guys get paid big money because their job is to know which way things are going based on statistical probability, not on a moving average crossover. Statistical probability, fact checks, data. It's all about data, which is why I always make sure I use tick level data. Because if you're using what your broker's given you, who's to say your broker's right? Who's to say your broker was the price that, and spreads, so much goes into it. If you use tick level data, you're using the most accurate data. Don't just test on one broker. I test on Alpari and Dukascopy. If I test it on Dukascopy and it works, I'll move it over to Alpari. Does it still work? Brilliant. Doesn't matter which broker I use then, does it? Intricate detail. But simplicity with intricate detail. And you will always find the best strategies. Go and do it. Use the Position Trader EA, right? Stick it on an hourly chart, use a daily RSI2, press the button and go, I want to get out with 1.5% loss and I want to get out with 2.5% of profit. Let it run on any pair over 4 years, 10 years, whatever you want. And just watch the profit curve. You're going to lose a load of money at points, but over that 10-year period, it comes out with a thumbs up. You can't find something works every day. That doesn't exist. That's where the hit comes, isn't it? You've got to stick through the crap. And the only way you will have the balls to carry on trading a strategy for any period of time that will make it successful is to backtest it so you have confidence that it's going to lose. I know that it will go into $25,000 worth of drawdown at some point, that RSI2 strategy, because I've backtested the portfolio over a decade and it lost 25 grand. So when my P&L here shows a 25k loss in a month, I'll be going, yep, that's totally within the parameters of the strategy. Most people, after getting a 2% loss, will dump it and run because they haven't got the data. They haven't done the work. And I can show you what I show you, but you need to do this, learn to do this yourself so that you have the confidence that you have proven to yourself that this works. Because otherwise, you're never going to stick it on a chart. That's the only way I think you can do it in this industry, because you've got to have confidence, haven't you? It's all about confidence, pressing the button and accepting the fact that it's going nowhere or wherever it wants, out of your control. Anyway, as Franco's pointed out, I've been on for 3 hours. It's because it's the first day back and there's a lot to talk about. But tomorrow's stream will be 10 minutes long. So this afternoon, be aware of PMIs. Manufacturing today. We've got services on Wednesday. So potential movement on the US this afternoon. But as I say, we're all waiting for Wednesday, Thursday for the two main interest rate decisions this week. And then everything will kick off. Yeah, we'll see where everything goes, basically. But it's just a case of waiting for news this week. Unfortunately, there's nothing you can do to say this is got any probabilities of working or not working. It's all about which way is the market going to drive these based on what these press conferences say. So these are your two main news events this week, unless they come out different numbers, in which case all hell's going to break loose anyway. But yeah, so I will be back tomorrow morning at 8 o'clock again, same time. And we'll have a look at what's happened with the PMIs this afternoon. We'll have a look at what's happened with the Swiss inflation numbers. And then, yeah, we're off then for the afternoon for the rest of the week. All right, so have a good day. Anybody needs anything, I'll be in Discord or Telegram. Yeah, back tomorrow at 8 o'clock. Have a good one.